Yeah. Sell down. Gap, dude. Looking like an up thrust. Kind of like what happened over here. Pretty much the same thing. CPI data. Sure, there's news. Gotta catch up this morning. I always miss it. Comes back above. Find support above 23. Well, we'll see. I guess it's kind of interesting. Volume on GME right now. Muted. I'm just being quiet, maybe. I don't know. I don't think it's muted. Yeah, I think I'm just being quiet. We're already having problems this morning with internet. Ridiculous. Just gonna quit Discord for a bit, so I'm not draining it. Well, aside from the gap, it would have been a nice bottom. So this kind of indicates that you might get a gap fill to bring you back down again. Maybe a near double bottom, maybe a little dip lower. You know, all things considered, you might think this looks really bad, but it looks pretty good. I mean, it basically came right to the edge here. So I think worst case scenario is just that gap fill. And if that happens, probably going to be kind of like that. We call it like a high. We were just joking about it. Kind of call it like a high heel. But you see this widening spread. 1, 2, 3, 4, 5. It's definitely building outward to. So a widening spread usually indicates some kind of change of direction, though it's not clear if it's not like clearly a direction. So this one's kind of sideways, a little more downward. But yeah, maybe this kind of topping motion here that results in like a final drop. And I don't know. I don't know yet. But that to me would make some sense to try to get down a little bit lower. I feel like it hit pretty much right where those intersections were at 23.35. And then the lower maybe hit would be down here at 22.13. So we'll see. We'll see what happens. I don't really know if it'll go really far down, so I'm just going to kind of leave it open. And who knows, this could be a quick gap fill this morning and then reverse, or maybe it just doesn't fill. But if it doesn't fill, it's got to be like a breakaway. So it's got to have some serious volume pushing us out of here. And right now it's so. It's kind of a mixed bag. It's about as much as we saw yesterday. So into close, I mean, it's okay. It's just not. You look at the grand scheme of things, that's not like breakaway level volume. It's pretty low. So this is the thing that you want to kind of pay attention to right here on RSI, is this compression that happened in that breakout. And I mentioned yesterday that I thought it was a really good setup for a potential cross here. It doesn't mean it can't come down again though, and that's always a difficulty with stuff like this, because you want it to go up. You have something here like a higher high, but that doesn't necessarily mean it's going to follow through. We've had this happen a couple times. These just become LSPYs where they're bouncing up like they're going to try to form a bottom and they just drop. So similarly, you wouldn't want to see this bounce out and then drop again and then continue down. So it needs to have that change of character. And I think we're just watching those extremities, like the major creeks here. This red one coming down, this one. Apparently we're crossing something on AMC. There we go. Okay. So I got to come back and look at this. So yeah, I think GME's in a good spot potentially. Just needs to find support above 23. And I believe that's not necessarily going to happen before FOMC today. But if it did, I'd be pretty bullish. And ultimately, I don't really care if it has another flush as long as it comes back up eventually. This is kind of what I would estimate, but this is just an estimation, okay? If it comes up above, it comes up above before. It's not a big deal. So, yeah. So we're going to have to see what happens. Did someone catch the CPI data? Usually that's released first thing in the morning or after hours. It must have been decent. The market gapped up. Of course, it's selling down now, but so this looks like another up thrust right here through the top on IWM. So I think, I don't know. I don't want to overthink it, because if it fills the gap, anything could happen. But it definitely pushed up above here and dropped back below pretty quick, 15 minutes. So we'll see what happens. If there's downward continuation, I wouldn't be surprised by that, because of the nature of where it went to. It went to that top again. And this has been like a sell zone, and we've failed to find any real support here. And so in order for us to kind of have any chance of a higher high here on IWM, you got to have support at like 220, 250. And then ultimately this has just been a sell down area. So as soon as it hit 224.60, it just sold through again. And that just tells me nothing's really changed just yet. So we're just kind of watching it, waiting. CPI down 0.1%. Okay. Okay. Like 10% or... So that's good, right? Because you want consumer prices to go down. I'm looking it up right now. In June, the consumer price index for all urban consumers fell 0.1%, seasonally adjusted, and rose 3% over the last 12 months. Not seasonally adjusted. The index for all time items, blah, 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 blah. So still, consumer prices are up 3% from June to June. But I'm just reading through it. August 14th is the next one. So it's complicated. I mean, they look really bad in 2021. So it's coming down. I don't really understand the year over year thing because I'm looking at it and I'm like, oh, I see. Because, yeah, there wasn't much change in the last year. It's pretty flat. So June to June, it's like 3%, 3%. It's like stagnating around 3. It says that they increased for all items less food and energy. It's complicated. It's complicated because it doesn't look like that on this chart, but whatever. It says all items in July of 2023 was 3%, 3.2%, and then it says right now 3%, so I'm not really sure I understand that. It's saying they're increasing. Is it like percentages of percentages? Who knows? So I'm on the government site right here. And this is the Consumer Price Index from the Bureau of Labor Statistics. And so yeah. But see, you go to all items. It's kind of confusing. It says here like all items, June 2023 is 3%, July is 3.2%. And then if you come to the most recent one, June is 3%. So I don't get it. It doesn't look like there's any change. I'm like either really dumb or I'm not getting it. I don't understand. So let's see here. Yeah, this is ridiculous. This was the worst time right here. Just massive increases. I mean, it's normal to have increase over time. Clearly, like, this percentage change happens all the time. That's just, as time goes on, money's worth less. But this is like a massive hike here in 2022. And then you can see the prices are coming back more regularly, but it's like basically the last year here. Maybe that's because they're subtracting food and energy. That's probably why that number's not showing up here. Because like it said before that it says the last time this figure was below 3% was in 2021. But it also said on the other thing that consumer prices for all items less food and energy increased 3.3%. With food and energy prices fell 1.8%. The largest with all items less food and energy commodities. Oh my gosh, this is confusing. With all items less food and energy, commodities less food and energy, commodities. What? This is bad English. Within all items less food and energy, commodities less food and energy, commodities prices fell 1.8%, the largest 12-month decline since 2004. So they're basically saying there's some good here. I mean, that's a big deal since 2004. I'm just looking at this. I guess this includes food and energy, but this just says June to June. It's 3 to 3. So prices were increasing pretty steadily. So it looks like we've kind of like plateaued is what it looks like. Because you can see like, oh, what is this? Food is actually going down consistently. Why is there such bad news about this stuff, man? August 2022 was like the highest increase, and then it's going down. It's like steadily. It's like 2.2% now. I wish these categories: food at home, food away from home, energy, gasoline. Let's just look at energy. Same deal. Highest back here, June 2022. Decline, decline, decline. These are negative numbers now. Here, this is reversing a little bit. So that's a little bit, maybe a little bit bad, but. Okay, well, that's all I can give you for that. I'm not like some kind of major economic guru. 12-month percentage continued. I don't get it. Why is there a whole nother one? Maybe this is something else. I don't know. Oh, whatever. So, overall looks fine. It's just a steady decline in consumer price index increases, which is still increasing, but it's declining. Increases are declining generally since 2022. There's really no major change, though. That weird little statistic I read was probably the biggest deal, but I'm not really sure what that means because they were just picking like certain things, and I don't know why that's significant, like what things they picked, why those things are significant. So I don't want to pretend like I understand that if I don't understand it. So I really have no idea why they picked that one statistic. It basically said that this was the greatest decline since 2004 in this particular group of commodities, if you don't have energy and food. So that's good, but I don't really understand the way they were wording that statistic, what they actually did. So I'm not going to waste too much time on it, to be honest with you. I'll just wait for the meeting today, and maybe Powell will talk about it. So, oh, why are you shopping at Whole Foods, man? I can get an avocado for 90 cents in our town. No, I get it. I get the down 0.1%. I think that on the whole, you have to like if you guys don't have Aldi, you're going to miss out on some great deals, but Aldi is the best. Aldi's like built around the idea that there's like less overhead, basically. They only have like 1 or 2 people on staff at any time, which, you know, is a mixed bag. But you also have, they locally source a lot of their stuff too. So they reduce like shipping costs and stuff. It's a German-based company. They're popping up all over the place, but I love them, man. If you like hard on cash, the only bad thing about Aldi is the selection sometimes is kind of meh. You don't have as good of a selection, and that's just part of it. And then we've got Tom Thumb, which is basically this. I think it's owned by Albertson, if you know either of those brands. I think they're the same company. I don't particularly like Tom Thumb. It's kind of expensive. they're like that. Like if you go to Tom Thumb, they're expensive. I don't know. And then the Walmart here with the super center is always cheaper. That's just because of bulk, and Costco and Sam's or whatever. Those places are always cheaper. You buy stuff like larger quantities. So would it be better to reposition after FOMC meeting, or what are your thoughts? So the way that people trade it is they wait for, I wouldn't necessarily trade this, but if you were trading like SPY or something, what they do is they wait that first 30 minutes or so, and they wait for the volume direction to come in, and then they just trade the fibs, because usually there's a pretty distinct reversal, and then the volume picks up again, and that's like the real move. So there's usually a fake out, and it's pretty much the same every time. There's usually like a fake out direction, and then typically, and then once the volume starts coming in, you get real direction, and then you can trade that. That's how people do like big swings on FOMC. I personally haven't had a whole lot of success doing that, so I just don't trade it usually. Mostly because, again, unless I see a really clear technical setup, I don't really want to take a risk of getting like blown out, because prices can move really fast after FOMC, so you got to be careful. Even with bullish news, right, you sometimes will see the stock price drive down first, and it can be pretty scary. So if you're trying to like swing trade, you can do it. You just got to be really cautious and wait for that big move. You don't want to trade like the first few minutes of the talk or anything. Like there's usually a pickup in volume, and then about 30 minutes later, there's a more of a conviction move where there's a direction picked. So yeah, so you got to be mindful that it's going to have some pretty big swings. So I'm of the mindset that if you're just trying to make sure that you're protecting yourself, you probably wouldn't want to trade just in general. But I mean, that's just me. Like, you don't want to trade it if you don't have clear direction. So like repositioning wise, I would probably just wait. Cause like if it goes up in FOMC, maybe that's what we were thinking might happen here, right? That's fine. If it goes down in FOMC, that's fine. But you have to remember, like, again, the initial direction may not be the right direction. So, for example, if this dropped low going into FOMC, would I be bearish or bullish? I'd probably be pretty bullish. If this rises in FOMC, it kind of just depends on where it is. And I don't expect it to just rocket all day until that meeting. That would be kind of unusual. But, if it chopped here and made its way across, I don't really doubt the chart just because, And I think at this point, it's kind of a mixed signal. I'm looking at IWM, and I'm really not feeling super, super confident that it's going to have some kind of massive break to the upside. This looks like a rising triangle, which I think it is. So if it were to break to the upside, we'd probably have a pretty clear indication of target. So what a rising triangle is basically, it is a bit more like a wedge, but it's essentially like a rising triangle because it's almost always hitting this 224 mark. So it's basically like it's approaching a level repeatedly that it's not able to break. So it's very flat on the top. I think you could argue that this is more of like a wedge because of the high here and here, but the price targets are pretty much the same anyways, so it doesn't really matter that much. So you can use like the poor man's way of doing it. And this would make sense to me anyways. So like you could take this and drive it low, and you can see how like, oh, if we break down, we're going to end up back at 210, like whoop-de-doo, Like, wouldn't you have already known that? Yes. So like we already knew that was probably where it would go if it breaks down. I don't feel like that's unusual. And the upside target's probably more interesting then, because the downside target, in my opinion, was always there, which is just back to test the previous top. So the upside target's pretty high. It's 236, and I feel like that's, I've already kind of talked about this a little bit. I feel like that's a bit unusual, though I understand why folks would be really bullish on small caps with a rate announcement. I actually think the more bullish option in this particular case is to go back and retest, because longer term, that's going to produce a greater longer term setup. So you pick and choose your battles here, right? Like short term, breaking to the upside would be like a really cool thing, I guess. You'd be like, yeah, it's going. But longer term, the lack of test back here on 210 could prove to be quite bearish. If this does actually go to like 250s, I don't know, man. Do you really want to go all the way back to 200 again, in the future? Or would you rather be set up to continue from there? Because the big setup here on IWM is actually quite nice, and going back to 200 to me, if after pushing 250, would just be kind of a big throwback, and it would ultimately be breaking back through this range, so that's kind of weird and not that bullish. So I find that to be a bad option. Like, I'd much rather get that test now than later. That's just me looking at it. But, some folks will probably argue it doesn't matter. It's a breakaway. Maybe you don't need to come back that low if it finds support higher. I'm not really going to debate that. I'll just say this. Like, if you go back to the 2020 breakout here in October, this is kind of that same idea. Like, they just sort of took off. We didn't check anything. And you pay the price later, you end up with these massive swings back down. And it's like, at that time, it would have been easy to excuse it and say, well, this has just got gaps, all over the place. So why does it ever have to fill them? Some of these haven't been filled, they may never get filled, and just because there's a gap there. But that's not what I'm saying. I'm saying it's because they didn't test this top. And that's the difference. I'm not just talking about like a gap level. So if you're hearing me say it and you're like, well, it's just a gap, Booksy. No. I'm talking about this right here. This concept of like taking off and not checking the breakout on this really long-term range wasn't good. And you ultimately have this massive pullback to check it later that took years, And so it really just depends on your outlook, I guess. If you think it doesn't make a big deal, it's not a big deal, and you think, well, if it comes up, come back down. It's kind of like that thing you talk about with the creek cross. Maybe it's going to come back down to 200 later and then break out. Very possible, that this kind of forms a distributive cycle again. It doesn't actually go very high and then comes back down to recheck that creek that we just didn't test. You end up back down here at like 200, for a while, and then maybe later you break back out. But this is ultimately like not really what I would like to see. I'd like to see it test now, come back up here, consolidate high, like above 227, and then continue all the way up to like 330s, because there's a huge trend on IWM that's really just been kind of left behind at this point. That's this one. So I'd much rather do that, I suppose, long term. And that's just me, I know that I don't even have calls out right now that long. I don't have anything really for IWM, but if I'm bullish on something, I want it to just be bullish. Like, I don't really want to have like these massive retracements later. So it's just perspective, One person might say that they don't really care. Doesn't really matter to them. In the long run, I guess it doesn't really matter to me. I guess it would just depend on where you're at position right now. If you're in a bullish position right now, I'm sure you're rooting for it to go up. You know what I mean? And if you don't really care, or you're in a bearish position, you probably would prefer to see it go down, to be honest. Do I think it looks bullish or bearish right now? I think it looks bearish, but that's because there's these up thrusts that are just getting beat down like repeatedly. These are pretty classic bearish tops right here. that's that. So we'll see. To me, this reminds me a little bit of the cat ear kind of thing. It's not like super, super strong, but I can see the four top, 1, 2, 3, 4, and it did break down in the middle of that. So the one thing I always look at with the cat ears, we talk about them a little bit on this channel, if you haven't noticed. The one thing I always look for on those cat ears is that cross down, because the cat ears always do this across some kind of a uptrend. Always. Like, they're always interacting with some uptrend. And so that second ear, the flatness of it is always like a M cross somewhere. So right now you can see it. It's a cross down here of this pink trend going up, which was really the first major trend. Maybe the second major trend. And the next one's really low. It's way back here. So, you know, it kind of just shows you like there's a huge discrepancy in terms of distance of like where we are, and trend wise this broke down. So likewise, it's an easy trade. Right now I do think it looks more bearish than bullish, even though this is like a rising wedge or an ascending triangle, which could be thought of as very bearish perhaps. I don't really see a massive decrease in volume. I see a lot of volatility, which usually you'll see a decrease in volume on these pushes. Tops still look a bit distributive to me. So here's what I would say. In a bull scenario here, what the market does is it drops quickly. There's two scenarios, right, for bullish. One is a spring. So in that case, what this is basically an auto reaction and then a phase B top. And what you would have is essentially you'd come down and you'd make some kind of a phase B support, and then after that you would build out like a creek here, so then you'd have a more distinct creek. I don't know exactly where that support would be. I can guess it'd be around 218, but I'm not positive. And then you'd basically have a spring. The spring doesn't necessarily have to come below this value. That's not really the case. Oftentimes the spring is just, you know, over here somewhere, an attempt to drive lower, and it could be an LPS or something, but you know, it could be that simple, and then it could just take off. So you'd watch for this like lower phase B action basically, and then you'd have an LPS or a spring down here somewhere, and then it would reverse potentially. So that's one possibility. So this is bullish, that could happen. I'm thinking right now it still looks decently bullish, although you can clearly tell this last up thrust came higher than the previous one. That's not really what I'm looking at. I'm looking at these tops. And the failure to advance is obviously not a good thing. You don't want that. But the bearish option here is really just kind of similar. You'd come down, you'd break below this marker and hook, and then you'd start creating like LSPYs until you get here, and then you pretty much drop the range, and then you'd have to rebuild. And I think this also makes sense to me for a few reasons, but the main one being that I think this would be a time to, I don't know, I don't want to say it has to do this, but this would be a time to kind of build out like a longer term range down here. Similarly, you'd have like a creek cross eventually, but it would be not this kind of like immediate spring action where it just kind of bounces out and then goes back to the top. So I don't know if that makes sense, but both cases you would head low. And I think the only other bull case here is that it comes right above this again. So if I saw this, I'd be pretty bullish. Like if it jumps back above this red line, I'd be pretty bullish. If it gets pinned beneath it, you just have to wait it out, but it should, if it does pin beneath it, it should eventually come back above, and then you'd have the rest of the move. That's pretty much the main bull path here, aside from like a spring or LPS. So that's what I would look for this. It's kind of like it's like one of two things, right? So you either have that spring or LPS. Again, it doesn't really make a lot of sense of the chart to do that if you think about this as a breakdown of a wedge. But I suppose you could argue that it could spring or LPS and not complete, but come like down and basically form out one of the two and then leave. or you're going to go ahead and drive the price down and do this lower range, which I'm just going to be straightforward with you. This has been my TA for a while. So like I thought it would come back up, drive the price down into August. We get a pullback into August, and then the next data release is on the 14th. So times out pretty well. You know, if you look at this, it looks pretty good going into the 14th to come back down and then wave back out. And that could be an anticipation of a September rate cut. You know, if there's a rate cut in September, then that gives you a simple build out for, you know, push out in September and a more proper exit here after a back test. So how does this affect AMC though if this is going down? And that's the bigger question. I don't know. You know, it could be that they're inverted for a little while. It could be that we're wrong and it ends up going down to 3 after all, you know, and that this build out doesn't pan out. Really, from now until August 8th or 9th, it's kind of, I don't say it's anyone's guess, but this technically could last for quite a while up here too. So I don't want to make it sound like this kind of do or die thing. But it is in a situation right now where I think it could potentially go long here. And it could be a ridiculously long range. So I know I have it drawn out really fast, but the fact of the matter is that sometimes this later creek here is kind of like a bludgeoning device. You see this in some reaccumulations where it'll create a kind of a phase B middle, and then it'll like chop in this section for a long time, and then it might spring later and then jump it, and that's also a possibility. So there's like a number of things that could happen depending on like where you accumulate and all that jazz. This would look like a big bear flag if it did that, but that's one that we've seen before too, and it's not unusual. It's pretty normal. So and that's just like it approaches a creek, but it doesn't jump it for a while. It creates like almost like a snake-like sideways structure here, where it just kind of keeps underneath it. So I don't know. Maybe this is the most bullish thing that could happen right now, just this breakout and run. Maybe this gives us better evidence for a potential run into the 8th and 9th, you know. Doesn't have to be as fast as I've drawn it either. I mean, it could be fairly slow. And then it just sort of begs the question, well, where do you end up on the 14th? I suppose if it goes to the upside, we'd be retesting all-time highs. So if you're wondering why I'm focusing so much on IWM right now, it's because I don't really chart it that much, and I chart it like every day or few days or so. I try to look back on it and make sure it's kind of doing stuff. I'll poke my head in every day, but I don't usually mess with it too much. So previous all-time high was way up here at like near the 240s. I think there's the support. There's another support area right here around 230s. So that might be the intended short-term target region. It looks like that's pretty close right there to our target. So 230s. So it could be that that's an area of build out as well. So it may just be that during this time period, again, I kind of drew it like straight up, but it could just be that during this time period you get a maybe more of a consolidation this week, and then going into next week you break out and you head to the top, and who knows, you know, at that point it could be just a series of repetition, kind of like what we did here, where you're just sort of chopping into August, and then maybe again on the 14th, sort of a spring, and then you just kind of go again. It's just a higher route, sort of a similar way to the same end, but much more narrow path. And that could be a way to get you to kind of go one-to-one with what we're thinking on AMC. So yeah, I don't know if you recall, but I had I had some concerns about coming low into August and how that might play in to all these things. So I'm not sure yet. I know it's a lot of different pathways. I know, but just based on the way this is set up, there's no confirmation either way yet. From a technical standpoint, this is basically reset RSI. Looks like it could be compressing to break back out for another attempt at a top. Big wave cross here, like a push up 1, pullback, push up 2. I don't doubt that. It's not like I'm saying it can't happen. Definitely could happen. 1, 2. Also could be a bigger pullback on a larger wave here. You can see here. That would make sense. 1, 2. It just depends on your outlook. But from a technical perspective, there's really not much you can say. Like it's at the 50 on the higher time frames. It's kind of chilling out in the middle. There's no breakout yet on the pattern. So we'll probably find out today pretty quick when FOMC starts. I don't think there's much room here to mess around. So I think there'll be a pretty concise decision quickly today. And we'll know, and at that point, yeah, I mean, if you wanted to reposition, you could reposition. So I've been pretty bullish about AMC and GME for the last couple days, just looking at the chart. And got a little bit scrutinized yesterday in the close about it because someone was saying, like, I'm always looking for upside. And that's not really true. I do look for downside. You all know that. I'm not going to give it any more lip service. I'm just saying. I was thinking about that because I was wondering, like, where do you draw the line on, like, responding to people? And, like, is there a place where you just say, no, I'm not going to respond and just ignore them? I think that's probably one of those situations that I should just ignore from now on. People say stuff like that's not true. MPW really dropping today, but I have a macro chart on this right now that I think is really important because I had mentioned flushing back down to the 480s. It's come significantly lower, and I think that that's important. I'm not going to ignore it. Not significantly lower, but it's come lower, like about 5 cents lower than I expected. So I thought it'd maybe go to 484. It's below that, so it dropped down again. I talked about a late double flush this week, or a late, punch up, push down. Thought maybe it had already happened because they did it early in the week, but maybe not. But this is an important macro chart. I just want to point this out because somebody said yesterday they thought MPW was just dead and it was going to chop, not leave 490s. And I can see why. It looks like there's possibly a consolidation going on here, that it might be having some trouble taking off. It's a heavily shorted stock, so it's one of those things where I'm like, yeah, I could see it. But this is a 30-week moving average, and anytime it's crossed up over the 30-week moving average, it's had pretty good runs. So every time it's crossed up and like retested and then continue to advance, these are the runs. They're fairly like regular. They're not necessarily a cycle per se. They get more and more compressed as time goes on here until the top. But the runs are pretty big. And if you look back at this 2021, or this is 2009, I'm sorry. It looks like COVID, doesn't it? This is actually the 2008, 2009 housing crash and all that stuff. This particular one sets up very similarly in some ways. And interestingly, at $5, $5 is what propels you over that 30-week moving average. So once it gained support here at 5, it pumps up above the 30-week, holds there, and then it goes. And it ends up being like a 98% move to the upside, really back to this drop-off point. It happens very quickly. We know that that's not exactly one-to-one. We've obviously spent a lot more time down here this time. That's pretty normal. You're revisiting an area that last time you were here was decades ago. I mean, it was a long time ago, decades ago. So this would be a very important region if you were going to reaccumulate, to spend time so that you can accumulate more shares down here. Since it didn't hit these levels for decades, if you expected it to recover, you would definitely want to spend more time in these lows. But interestingly, or maybe not, I don't know how you want to put it, it did the same thing at 5 here, kind of pinned below. This push up distributes above 5. So right now it's definitely got this sense of like it feels kind of pinned, right? And it's having problems advancing above 5. So whoever's selling the stock is definitely selling it over 5 right now. And I don't think that's new. That's not news. You should be able to see that no matter what. I tend to focus more on the waveform analysis, and I've focused on this as a retracement. I didn't really focus on this as a sell wall here, just like a push up and then a retracement to the 618 and then an advancement again, assuming it's going to blow through that level. But the key here is that if it does blow through that level, where is it at? And I looked at this closely, and that's the 30-week right there. I just added a line so I could see it easier, but it's right on it. So it could be that this doesn't hold and we end up chopping around it again or dropping from it again. But for right now, like this is pretty much the level is right here. I mean, right where we're at the 480s. So you can zoom in and see it. It's not looking super bullish right this second, like millisecond, because it looks to me like that is right there at like 481. So it's at price is at 480. So you do the math. It's a penny off of it right now, but we've been kind of dancing around it for months, and yeah, and I'd expect there to be a few weeks of maybe consolidation here, and we were talking about that as a necessary kind of pullback because it went parabolic and then pulled back down. So it needs to find a bottom, but I genuinely think if it finds a bottom on the 30-week here, it's kind of probably blow past 5 pretty easily. And I don't know, timing wise, it's debatable, but if it does find a bottom here in this area, it should be really strong. And then I noted that on the weekly, anytime it was approaching this level, I went back and looked at those breakouts, and they're all the same. Like they all come back down to retest the 50, or they're crossing the 50 on the weekly RSI. So during that check on the 30-week moving average, they're also jumping over that 50 on the RSI on the weekly. So if you go to the current time frame, that's where we're at right now, right here. So it's definitely like a hot zone for MPW, like the readings that we've been looking at this on this chart have been fairly bullish. There's bearish opportunity here if the bears knock it back down. I mean, you have to kind of consider that they could keep it pinned or something. I'm not going to sit here and pretend like that's not an option. I mean, it is. But at the same time, like, you can see it's on the precipice. It's like right on the edge. And what's required here is just that support around 480s to build out and buy up from there. And I think, I'm not going to say it's going to have a 90% run, but even on average, if it went, 80 to 70%, we're still looking at that $8 range. And that's kind of what we measured out, was like $7 to $8. In terms of that cliff, like where's the cliff at? If you look back at 2008, that crash, it's really a similar level. It's slightly lower. It does technically drop from that same cliff right here, but frankly, like the full recovery would take you back up to 12. And I've talked about this before, but the fair market value for this is like 14 or something. It's not way down here. So if you turn in terms of like market cap and all that stuff, what the value represents should be much higher. So, I mean, again, maybe short term, we'll see. If this play doesn't work out short term, it doesn't work out short term. I'm hopeful that it will. I'm confident that there's going to be major upside over the next few years, probably at least a 200% gain, to be honest with you, because I think it could go up to $8 to $12 pretty easily over the next 12 months. But in terms of like immediate breakouts, it really is dependent on that pocket right here, right now. I think if it can find support, it's going to move pretty quick. And yeah, it's basically an inverted head and shoulder. I mean, you can see that. So not surprisingly, again, you would expect it would need to break back above this level here, potentially around 550s or so. And I don't want to, again, read too much into that just right now. I just wanted to point that out. If you haven't checked it out, check out the 30-week moving average EMA on that. and also where that RSI is on the. So I think that kind of stands in contrast with this idea that it's a dead play, which someone said yesterday at the end of the stream. I didn't read it out loud, but they were like, "Oh, it's dead" or something. And I'm like, well, I don't know. Are you saying that just because you don't want me to look at it, or are you saying that because you genuinely believe it's dead? I think it's possible that this could end up somehow consolidating here for a time, and I don't find that to be out of the realm of possibility. You know, I do think it jumped over the major creek that we had, but in the grand scheme of things, like you always have to take it and consider the possibility of downside. So anyways, that's about much lip service I'm going to pay to MPW for now, unless something crazy happens. I'm not particularly thrilled about dropping that 30-week, but we've been here before, you know, and it's had trouble like holding it. So it may be that there's just a really strong seller presence here to like drive it back down. And that might be part of the reason why these calls blew up, because it's seriously jumped over and found support on that 30-week for a time. And I think that might be a major signal for a lot of traders that watch this long term. So we will see. Yeah, so unless GME comes above, and I think it's kind of doing that thing, selling back down for the gap. Unless it comes above 23, I'm not buying it as a move yet. But it is turning up on RSI, and that's important. So after making consistent M cross, M shape, M shape, M shape low, it bought out, and now it's rising again. And there's no doubt in my mind that that's a cross up. You can't draw this trend any other way here. So it definitely looks like the RSI is pushing back and starting to direct change. This is a 15-minute time frame. You take that for what you want to take it for. I take it as a compression, and I was talking about this yesterday, making a case for this is actually a really good setup for a potential bottom. Usually we get this kind of compression into the bottoms, and then we get a pretty decent move back out. Doesn't mean it can't come right back down. It's just a matter, because it's a short time frame, but typically we don't see us come down this low for this long on this kind of divergence, because from here to here it's divergent, you know, and that's pretty significant, you know, even though it's just a 15-minute. I find that to be very bullish. So and then that compression with these iterations, I think it's going to be a pretty huge move back out, potentially. And I get that people are skeptical of those things. I'm not gonna like pretend like it's somehow like perfect. If it's not perfect, right, I don't need to sit here and be like, it's perfect. It's not about that, you know. It's about the fact that where this is set up looks really decent to me, you know. And I think after FOMC you might get a nice pop. And I would like to see it, if possible, if we can get back above 24 this week, that would be really strong. Like if we could end the week up here at 24, that'd be a big deal. Not only percentage-wise, but just in general, like in terms of like setting up for next week. And no one's going to complain about an 11% move to the upside at the end of the week here. But really, this is more about this setup. And to me, that would be really powerful. So I'm going to watch this one real closely this week because, yeah, I genuinely think that it's in a really good place to potentially turn around. If I'm high risk, I might be thinking about it. I'm not really interested in trading it this time unless I've got some confirmation. So I'm going to be waiting for that support over 23. Because the reason for that is I don't know that this isn't done flushing. Even though the RSI is turning up, even though the compression's happened, that doesn't mean you can't make another low. And certainly if this were to drop low again, you could see it coming down a little bit lower, and it wouldn't be like the end of the world. Right now it looks like a pretty concise bottoming action, and I'd like to see that continuation. Last time this happened, you can see it right here. It's dangerous, right? But last time this happened, it kind of pulled back low. But there's a significant difference. I know it's really mild, but I want you to take notice of this. Notice that this early reaction here, like when we came back up, we didn't push higher until later after this jump. So like that's important because it didn't ever push resistance, you know? And then this actually came lower than this bottom. So it didn't push resistance and it pushed lower. So today, just looking at it, it looks to me like it pushed higher. That high was 2301. This was 2302. So it looks like it's pushing higher. So finding a support after this kind of a move at a higher high would be really positive, or at a double bottom here could be really positive. The closing value for this was 2239, so it was very low. So in order for us to have like a more successful bottom here, you would want to see it not go below this bottom for sure. But at the end of the day, like here to here would be good, would be fine. It just needs to make a higher low and then continue up. Ideally, it wouldn't go below 2256, but I don't know if that's going to happen with that gap below. So that would be better just on the whole. If it came to 55, I'd be like, okay, cool. That'd be fine. And then our darling AMC. You guys are like, finally, been watching the stream for 30 minutes. He hasn't talked about AMC once. I haven't talked about AMC yet because yesterday, at the end of the day, I had a lot of thoughts about it. And I said that it was good and bad. So there was a problem in that we crossed low. So if you look down here, you can see this blue line going up. This is a wave crossed down. And it just means that you lost a potential trend. That's not all bad news though, because sometimes depending on the setup, that could just be a spring action that we call it like a slingshot, where eventually it catches back up. I don't know if that's super likely right now, but it does seem like something that's possible, and that could get you back up to like at least the 450 or 550s on just this particular setup, nothing else. If you were just looking at this localized range, that measurement from here to the drop-off point up here, that can get you back to 547. So basically it's a halfway distance to. So the sell down point was 529. The bottom here is like right around 512, 511, and then if you double that value, you get up to the 547. That makes sense. So we're basically moving away from a potential target. So that's the supply zone. You've moved an equal part away from it. But I noted yesterday that it really, in the upside down land, right? If I were looking at this with a chart flip, I would be very, very, if this were, for example, this were the right side up chart, I would be very bearish. I would be thinking this is going to drop because it's very flat, rounded. And this to me looks like a series of attempted up thrusts. And you'll notice here that what we did yesterday was indeed an up thrust. Again, upside down land. So let me delete my little lines real quick. Look at this move right here. So we're pushing against a creek. We're barely kind of hanging on to it, right? So if you were looking at this upside down, you'd say, oh, it's having some trouble maybe finding support. This to me looks like an attempted move up that kind of fails to advance. It basically comes up and double tops. That doesn't mean it can't try to go. We've seen bottoms like this that, they bounce in, they push up, and they have those, drops down. But this one particularly is very rounded. It's very flat. If I were seeing this on our chart, I would usually think this is that curtain rod, and it's about to drop. That doesn't mean it has to. Things can be different. It doesn't always have to be exactly the same. But much the same, if you flip it back right, this is very rounded. And traditionally, that's a lot more bullish for AMC. A lot more bullish. If you look at our advances, they tend to have that nice rounded look to them, as opposed to places where we're kind of stopping, which tends to have that U-shaped look to it. That's just a signal of like you're selling off quickly, so you're dropping those highs quickly, and then you're having to build back up and drop those highs, build back up, drop those highs. This is not like that. This really does not look like that. And again, this is kind of where I got criticized yesterday for being too much of a bull, I guess. I get criticized for being both. But this is very much like a more bullish setup. This is very similar to what happened, in my opinion, what we saw in that first breakout back in May. And it's not one-to-one, I'm not trying to say that, but it is similar in terms of the overall shape. That rounded top is very powerful. You know, this to me was like a huge deal. And I'm not going to try to necessarily go 2 for 2 here and try to make the perfect call out or anything. But when this happened, I was very bullish about a potential run. You know, I was reaching out to people that I talked to, and I'm like, hey, this looks really big. Can you give me your opinion on it? It looks like it's a huge bullish action here. You know, and it's hard to see it maybe because you're like, well, I see upthrust there, Booksy. They're little. Like, look at those little upthrusts. Yeah, but all the same, like the overall pattern was this kind of bouncing, arcing pattern. The volume on the tops wasn't ridiculously high. You know, it wasn't like some massive, except for this one, it wasn't like some massive sell down. You were getting this bouncing pattern repeating here to here to here. It wasn't trying to advance too early. It hadn't done anything too crazy in this advancement. Our time frame's a little different because the early bounces here are struggling, right? They are advancing early. So there's some differences. But on the whole, if I were just looking at this helicopter view, you know, you could see all my gobbledygook here, but it get the same vibe. Like you're getting these nice like rounded tops. You're spending a lot more time in the upper parts of this range, like a lot more time in the upper parts of this range than the lower parts. Here's a good contrast for you. If you go back and look at this place, this is one of the areas where I was kind of bearish because I was like, I don't like the way it looks, right? And this is just to help you kind of visualize if you're not sure what I'm talking about. Notice like how you spend so much time in the lower 50% of this channel. You see this? That's typically a mark of distribution. And because you're basically, every time you're pushing up, you're rejecting. So yes, some of you might have looked at this and thought, it's just a bear flag, Booksy. It's easy to read. But I don't think so. You know, at the time we were looking at it, it was like, I don't know, you know, it's kind of jumping creeks. But the one thing I kept coming back to was that volume was high in the peaks. All these peaks have super high volume, like 1, 2, 3, 4. And then it was spending a lot of time low, so you're getting those U shapes. But ever since then, if you look at this on the whole, we've definitely spent a lot more time in the upper 50%. I think, you know, we can debate sort of the intricacies of the chart and talk about all the little details all day, right? All day, every day, baby. Yeah, like, please don't do that, Booksy. You know, we could talk about the intricacies of this chart repeatedly, but on the whole, I have to just say it because I think this is true. Aside from like this very early upthrust here, like this has predominantly been more textbook bullish because we're spending a lot more time in these tops. And this recent move to me looks just like another sort of iteration of that. Like we're getting this acceleration of momentum, you know. So I find that to be a good sign. And if I were looking at this again from like a helicopter point of view, I'd probably say, where have we spent the most time? Are we spending a lot of time in the tops or in the bottoms? You know, because you could look at this and say, oh, it looks like a bear flag or something, you know, like, but I don't think so. I think it still to me reads, maybe I would even put it in like a wedge or something, probably be better. Like this. It ended up being like a wedge around 485, right? But if you were looking at this, you'd say, absolutely, you're spending way more time high. And that might seem bearish to some because they're like, well, what if they're just taking it high to sell it, you know? Screw us over, you know what I mean? Well, maybe. But on the whole, like that's a good sign because you're not, every time you're going low, we're buying it back up. We're not spending like a huge amount of time. It's very different than what I just showed you over here. And ultimately, if you go back and you look at distribution cycles, they're all the same. Like they all do the same thing. You know, you can check my analysis. Now this one you might be like, hey man, that didn't do that. You know, it looks like it's high. Yeah, kind of, but if you look at the actual trend right here, it's just a series of like U shapes, and there is no bouncy shapes. Like, so you got to be careful. I mean, it's obviously like in the eye of the beholder, but this is the way I would have looked at that, and I would have said, no, we're definitely spending more time on these bottoms, you know, and it's just an average, but you can see it visually. And then here, unfortunately, and we all watch this happen, this early one, you're spending more time in the tops. So like it's a change of character, right? So first you're like down here and you're like, really, you're spending almost all your time in the tops, you know? That typically is more bullish. This is just a kind of a cheater's guide. It's not really like the most perfect thing to use, but I find it to be really helpful because I'm a very visual person. So here you can see we spend a lot more time in the tops. And then look at that in contrast to this area over here where we're almost spending an entire time in the bottom. I mean, that's not really what you want to see. So this is a lot more like a lot of the other stuff we see on AMC. This is pretty different. So when we got to this range down low, I was very bullish about it coming into the end because I was like, man, this is looking really good by comparison to some of these other ranges we've had. Like we're spending a lot more time in the upper 50%. We're really like doing a shrinking iteration here, like bouncing in. So I'm not trying to like cheat anything. I'm just looking at it. Like I don't think you could make an argument that this has spent more time in the bottoms. It's just not possible. So you have to be careful with it because obviously you don't want to like overdo that. But I was making a case earlier in the week that we'd probably come back and retest this line. And I have it on the other chart, but this is kind of what I was looking at as like, where are we going? Why are we going into this? This is also why I kind of thought we might be in a bearish position because we came low. So it's a double-edged sword, right? You can't have it both ways. You're above it or you're below it, right? So there was a time where it dropped and I was concerned that it was going to just keep dropping and then it was like some kind of a fake out. But this has been the main, my main focus point lately. So this is just an example to show you, like on the whole, the reason why I've been very bullish and why I've been talking about a lot of upside, even though I did talk localized downside quite a bit in this range several times. The case for it's simple for me. Like it's just more like an accumulation than a distribution. Like it could be that simple. Like we're really holding up very high. We're building up. This to me looks like similarly to this drop here. You know, and then in this drop, you've got like a pocket that at the very end, you know, it kind of breaks out of this bouncing. It does like a final bounce that's real low. And it's a perceived breakdown. I mean, you can see it. It looks like we went over 23 on GME. You can see it right there, like that perceived breakdown here with that up thrust and the drive back down. And we have a similar thing here, although it went ridiculously high, right there. So do I think that they're very similar? Yeah, you know. And ultimately, we already know how this ended. This ended up rocketing, you know, back up over top here. But do I think that's a similar kind of picture painted? Yeah, I think it's pretty similar. I don't need it to be like perfectly one-to-one, and it's not. It's definitely a lot more delayed. This is the biggest kind of moment because it dropped that. and I said it had to be a terminal action. That's why I titled my thing for a few days like it's terminal or bust at this point. It's got to have that reactive move. It can't stay low down here. It just wouldn't make sense after this flush. But on the whole, just looking at this, would I say that this is pretty much the same? Yeah, pretty much. And I don't think it's hard to I don't think it's hard sell, I guess is what I'm trying to say. Like, it's very similar. So I am feeling pretty good about it. I don't think that I need to be acting like a perma bull or a perma bear in order to have like a background of, hey, in general, I feel like this has been really bullish. There's been one particular moment here. This one was more of a localized sell-off. I wasn't overall bearish. I just said that, we're going to probably come low again. And we did. That happened. And then I said, we'll probably come down Tuesday or whatever. And it was around that time. It wasn't exactly right. Oddly, it was like right on that. I don't even understand how that's possible, but it was right on that double flush. And that's just the wave ending here. So you take it for whatever you want to take it for. The biggest bearish field that I had was over here, and it's really just because this came up above the top, and I still don't know what to make of that. I'm just going to be honest with you. It doesn't make sense to me. I don't know if it ever will. We don't see this anywhere except distribution usually when it's like that high up. But maybe it's just a matter of them testing the tops and bottoms of this like perceived wedge that I drew. It could be that simple. Maybe it was just a way to flush high here so they could flush low. And that's that. And you see that bounded reaction. This to me is like a really bullish reaction. So I had hypothesized early in the week that we would come back down pretty low. I thought we would end up back down around 5 or maybe 590s. So a lot of that has to do with, and this is a weird chart. This is a 45-minute chart. I don't know why I clicked 45-minute time frame, but I did. Let me make sure this is the right point. It is. A lot of it had to do with coming back and retesting this mark. And if you go to lower time frames, it looks like in a slightly different spot, like slightly lower. But I said it may come all the way back down to 5. But that was over here. So early this week, I said if it broke down, you might expect it to come back down to like 5 or like 490s. And that made sense to me because you would come back and recheck these levels over here and retest this trend. Thus far, it hasn't done that. Thus far, it has only come back to 511. But I digress. Once again, you flip the chart. What does that look like to you? I know what it looks like to me. It looks like that curtain rod drop, and it looks like that it's about to drop. So I was making a case also yesterday that, look, I can get kind of complicated sometimes on my charts, and I understand that. But at the end of the day, like if this doesn't hold for bears, this thing's going to drop far. It's going to move. And reasonably, you would expect it to come find a support. And there's just not really much there. I mean, you can look at it. It's pretty plain and simple. And you're basically coming back to the 570s. It's a big drop. So, and then in addition to that, you could look at these creeks, because I talked about this as like an inverted cat ear. And if you look at it like a kitty cat ear in reverse, like 1, 2, and then a cat ear top, it's kind of fun to do it in reverse, right? Because so often that cat ear is bearish, and you're like, I hate cat ears, man. But if you do it in reverse, this is kind of fun, It's like, oh yeah, hey, that's our target way down here. You're like, really? Yeah, really. Because if this were to break down out of that trend, I would be like, oh, it's going to go, this is it right here. Like, it's going to go down. It's not really that complex. If I were looking at this in like upside down land and I was like, what is this? This is, good or bad or what? I'd be like, well, it's not really spending a lot of time at the tops. Looks U-shaped. I'd be taking these cat ears for a drive the other way. And I'd be saying that we're probably going to go for this cross because this is typically what happens when the cat ears break. So we're right there if you look at this in like upside down land world or whatever. The question mark in my brain isn't really whether or not this could happen. I think it definitely could happen. It's more about whether it happens before earnings. And because they bumped earnings up to the same week as FOMC, it's a difficult one because you could see it going either way, you know. And some of you are going to look at this and say, well, it's only going to go to 650? What? That's not high. No, it's not that simple, you know, because in this situation, I wouldn't just stop there. Like, I would be looking at this as a breakdown, and ultimately, you know, could this come back, retest the top, and then go farther? Absolutely. And this is what I expect. This is actually where the 50-50 is here at 8, and that's where I would expect to be headed, right there, back down. Because, again, like ultimately, as in the previous example, you look back and you can see like those are the markers that you'd be looking at as essentially like parallels going up. They're slightly off. They're not really parallel, but you can see them like right there. They may be parallel. I don't know. Maybe we should just let it be what it is. If they're supposed to be parallel, they're parallel. So let's just kind of split the difference between the two. They probably are, and I'm just kind of fudging it. But yeah, this is the layup that you would see on the way back. So that's the way I would look at it if it were in the upright position. And then this would be the final like push right there. So you can see what I mean. Like, it's a big deal, you know. And I've been talking about going to like 13s and stuff, and people stick their nose up because it hasn't happened. I get it. But this is basically like the way in which we move when we move fast. And this happened here, by the way, in a really rapid fire way. And I don't find it to be, you know, incongruent, I suppose is the right word. Like, this is the same thing right here on this setup. And you're like, hey man, but that's super steep. Yeah, I know. It is. But the thing is like when you go back and you look closely, you can see those levels being met here, you know. And it's clear as mud maybe, but it's there. Like, there's a pretty clear move here to here. There's a wick there, and then it just drives. This actually goes well beyond this one. Arguably, I guess it comes out to here. I don't know where that would be for us. Maybe this guy or something. But then on the way back down, they're also kind of worked in. So you can go check it. You know, you don't have to take my word for it. Just go take a look at where those layup levels are, and you'll see them like here, right? And of course, that's essentially what I'm saying is going to happen here, albeit it's not as steep, but I think that's reasonable. This is very similar to what happened in June of 2021. It was actually, I think it's a heavier volume move than the first one if you look at June, but it doesn't go as far. So, hang on, someone's at the door. Random people?
I don't even know. They're not like delivering anything.
Well, and then we're not going to open it, I don't think. All right, I'm back. It's all good. So it's looking like it's crossed up, and here's the way I would interpret this. I think I was right to look at it like an S curve. It's got the M cross and the up thrust at the end, so all good. No one was coming knocking on my door looking to get me. Some foreign exchange students that were selling education materials for kids, so they got me. But I was, I don't know. It was a good experience just talking to them. So I just sat there and talked with them for a bit. You guys are like, what? You abandoned your stream? I mean, it's long days, you know. You got to take it in stride. Don't worry too much about things. We got to wait till FOMC before we really see, like, completely where this thing's going. So I get it. You're probably annoyed. I'm not really sure the length of this thing. Another year. It was a good thing. It's not like brand new stuff, but they have materials for like teachers and stuff like that, which is not what I need, and I didn't really want that. But they had some good, almost encyclopedia like books. But there was one that was like about like a dictionary that was like a fun dictionary, and I read through it a bit. It was a good one, so I got it. I was like, I like this. This is something that I know, like you're every kid has their own strengths and weaknesses and stuff, and my son has a lot, but I know that it would be something that would be really useful for him. So, he's a lot of strengths. This looks like a cross to me, so I think this is done. To me, this looks like it's confirmed as a double down and then a push out. Anyways, I mean, spend money on dumber things in the world than books, so I don't feel like it was a bad decision. Y'all are like, you're trying to justify it, dude. It's obviously a bad decision. I don't think my wife's going to be super happy. She's a librarian. She's like, I could get him those books. I'd be like, yeah, I know, but it's also for a good cause, so whatever. It's not like someone out here trying to sell me like insurance or something. Can't stand that stuff. I just turn those people away. I'm like, no thanks. Sorry. And I'm sorry if you guys are an insurance salesman, but that's just not me. Not for me. Yeah, so this to me looks right. I think that the way this is set up, it looks way too bullish in some ways, and I'm wondering here, because this is not a huge S curve, it's pretty small. So let's do a fib extension on it. So I don't feel like it's got enough juice to get you all the way up there, is what I'm trying to say. Actually, did this make a higher low? This bottom's at 511. This bottom's at 511, so it doesn't really matter. Negligible differences here. Well, this is very debatable. I mean, the 1618 is up here around 660. This 1414 is definitely the number that keeps popping up. It's the 643, and I've gotten that target before. You guys know that. That's the target that I had over here. It was 643. You guys selling knives for Cutco? Girl Scout cookies, Thin Mints. Buy that extended warranty. I know. I'm bad with door-to-door salesmen. I guess if it's like something that I know that I kind of want, they usually don't even have to sell me on it. I'm already like, sure, I'll buy it. And that's not a good place to be, because salesmen can just walk all over you. But I try to negotiate pretty well. I bought a, this is definitely like a weakness of mine. I bought a Kirby vacuum, and we still have it, by the way. It's been like 10 years. It's a good vacuum. I have no regrets about buying it. But we bought it like they only do like door to door kind of stuff, and pretty much. And man, I know that they play it off like you're not walking them down because they're always like, well, let me go talk to my manager and see if I can get you a better price. But I just waited. I waited so long, and I walked that guy back so far. Like, I think the cheapest price that anyone's ever gotten. Because I looked online at people that bought those Kirby vacuums, and I was like, these people paid way more money than I paid. Like, I strangled that guy with like a silence treatment. I'm not saying it out of a source of pride, although I guess I kind of am. So I got a really good deal on that vacuum, and I haven't bought a vacuum ever since. I mean, it's pretty much been like, yeah, it's been over 10 years now. And aside from just replacing the belt on it, which is really the only part you have to replace, that thing is like solid. It's straight up metal. I mean, you're not gonna... I like that kind of stuff. So like when I see it, I'm like, yeah, I already know I'm gonna probably buy this. You mean a metal vacuum that has machine parts? Nothing that's like made out of plastic? I'll buy it. I'm like, that's so simple for me. I'm like an idiot for that kind of stuff. I spent a fortune on a good pump, but it was like a cast iron, like solid, you know what I mean? Like a sump pump. And I was like, I'm not buying some cheapy thing that's going to break in like a year. I want something that's going to last like a decade or more. So I'm all about that. So if you try to sell me something like a machine and it's straight up like old school metal and metal parts, I'm like, yep, you already sold me on it. You don't need to keep talking. If it's not plastic, I'm probably into it. I mean, that's just kind of the way it is. I just don't know. I mean, I'm not saying like Kirby's, it's like I don't know if it's a scheme. Maybe they sell really well because they're doing the door-to-door thing, but I paid a good price for it. I don't regret it at all. Like, I think back on it and I'm like, yeah, I would much rather have done that than bought like a vacuum every 3 to 4 years, which was more typical, you know. And you might get lucky. There's good vacuums out there that are high quality. You guys are like, why are you talking about vacuums, Booksy? It's because of door-to-door salespeople. But they were like these Latvian college students, and they were doing like this exchange thing. They just sell education books to help pay for their college or whatever. It's legit. It's not, I think, hopefully. You guys are like, Booksy just left to go talk to some Latvian people. The dude was nice. What could I say? Suckered me. That's cool. Yeah, look at that. Looks good. Let's see what this is about. I think we filled that gap, so it looks like if it's gonna advance, it could. Dyson's too overrated. It's good for cleaning businesses. Yeah. Only 4 people got my Cutco knives and they're still solid. Well, Cutco makes good knives, so. I mean, like, that kind of stuff sells itself if you find the right person. Because if you have a quality product, you don't have to worry about overselling it. No, this guy was definitely a young Latvian person. I promise. But when he said he said to me, he said, "You look like an actor." I was like, "You definitely tell that to everybody." I said it out loud. I was like, "Yeah, I'm sure you say that to everyone." He said, "No, this is first time I ever tell someone that." And I was like, "Okay, whatever, dude." I know what the salespeople are doing. I'm not an idiot. I'm really not. I'm very aware. I used to do I did advertising in in college, and I know what the tactics are for successful advertising and like where they're trying to go with the product and how you try to sell that product to people's emotions and what you're trying to tap into when you ask those questions. I'm very aware. That doesn't mean I'm not susceptible to it. It's just I know when I'm being sold a product. I'm not an idiot. What I want to know is if the product is good. If the product's good, I'll consider it. You know, I think the rest of the stuff to me bothers me more. I'm like, just get to the point, man. Like, if you're gonna sell me something, just show it to me. Let me see if I like it. You know, you don't have to like win me over emotionally or something. I'll buy it if it's good. I'm really simple like that. I don't know. Maybe that's a bad thing, but because I get it, man. Everybody's a salesperson. Everybody sells you something, you know, to some degree. It's not like an evil necessarily. So I'm still waiting on GME. I'm not going to enter this until I see it come back over. So I was expecting there to be some kind of a bounce up to this creek, some kind of a pullback, and then an advancement. Stroking egos, yeah. That's the kind of stuff that I'm like, you don't have to go there, you know. So GME looks good. I don't think it looks bad, except that I don't believe it even got close to that gap fill. So there's a little bit of a problem there. It reminds me of some of these advancements, which they gapped outward a couple times and then they would have to come back later. So I would be very patient. I'm going to be very patient with GME because it would not surprise me if, for whatever reason, even on a slight pullback, this still has like a massive drop potentially. So unless it comes above and it finds support here and then continues, and really, I know I've got one confirmation target, but it's really a double confirmation because what GME might have trouble with is this second creek here, this outer creek, which is at like 2360s. It would probably come back to this drop-off zone at 2360, but this has to become a support. So I've got this coming right over top here and then coming back down. Really, in some ways, it may be more prudent to expect this to be here and build out a support. This is going to be a really important, like this is a really bullish way of it traveling, like straight up above and then back down. This would be maybe a more prudent way to look at it because the way GME has traded is it's created these M crosses up. You can see here, and then it did the same thing over here. And then it has failed to continue, and you don't want that here. So up until this point, the door is open. You can easily see how this could, on a Friday, going into that Monday, for example, this could come back down. You know, it could be a little bit like this bottom over here, where it drove the price up high and then dropped low one more time. And that's what happened on this cross when it finally exited, is it drove the price up high and then it came back low. That would essentially be like a widening at that point, and then maybe from there it breaks out. And that's, again, sort of an anticipation of Monday, a possibility. So it's a tricky one to be in right now in GME. I think there's definitely some chances of pullbacks either around FOMC today or afterwards at like two door-to-door salesmen selling pizza would get me every time. Yeah, exactly. Because if you want the product, you're going to buy it. You know what I mean? You don't need to stroke my ego, but yeah. Anywho, so this to me is a big deal, and I think this is the creek cross that if it happens, I'm going to be watching for any kind of reaction down. So again, even though I've kind of got this drawn up pretty high, it may actually be much more, maybe more benign than that. It may be like here. You know, it could reject early and head back down. This would not surprise me at all to see this, and to have it come low to fill that gap here might make more sense in some ways going into Friday and then build out for Monday. I don't know why I don't have Monday marked off. I guess because it's technically like Tuesday here. But the grid thing ends a Monday. So this could build out, again, much more sideways. So I just want you to kind of be aware of that expectation-wise. There could be even if it broke out here and held 23, there still could be a chance that this has a nasty drop if we don't fill that gap first. If we fill the gap now, I don't think that it's as likely. Does that make sense? So I've got this drawn a little bizarre, but I hope that makes sense to you. Like, if it doesn't fill the gap now, I think it could go back up and back down. If it does fill the gap, I think it's going to just continue. There's two different paths. Maybe I should do them in different colors and just do that. So if we go ahead and drop low and fill this gap, I think there's a strong chance that this could just continue upward. I think if we advance too early, I'm going to call it a green pass, and to me that would be a little bit stronger. If this continues the way that it's going now, and were to break out early, so let's say it doesn't fill the gap, I think there's a better, not better necessarily in a good way, but I think there's a stronger chance, we'll say probability-wise, that this could end up heading back down and chopping low. So two distinct pathways here. Neither is particularly bearish, to be honest. I think both of these are fairly bullish, but one would definitely be a preferred route. I'd rather it go down first, because then if you get a confirmation, you don't have to worry about it dropping later. If it goes up first, I'm still going to be very, very, very cautious about a potential drop later. I hope that makes sense, because I think this is likely to happen if it drops. I think you could get stuck down around 22, and it may work its way out before Monday. I mean, it may get pretty close to exiting here, but you probably wouldn't get that confirmation of the actual creek cross until Monday, and then it would potentially just rocket. So these are different paths to the same end. So I'm of the opinion that this looks pretty good. I just think that you gotta be careful about this possibility. I think it could chop up some contracts. I still think it's pretty strong either way right here. So I'm looking forward to seeing where it goes. I haven't done any kind of investment on it at all. I've been waiting for a bigger break outward on this AMC chart, see if I can exit these calls. I need to get out of them today. The ones that were like short term, they're up and down, they're chopping around zero, so I'm technically still like scratching on them, but actually I think they're up now based on where I got in and averaged down a little bit. Yeah, they're up like 50% right now, but up 50% on the day, I mean. So they're not, so one of my positions is up like 30%, the other one's down 10% or something. Like, they're not super positive yet. So if this explodes to the upside and doesn't chop and break down, should be in a good position to advance. I'm a little nervous. It's starting to look like that double top we see. A little nervous about that. Nothing too crazy, just watching it. I'm actually going to look at EMAs here. So I'm going to look at 180. So on the 15-minute, we're definitely riding above it, which is positive. It's below us at like 517. That's a positive sign. Let's see where the 30-minute is. 30 minutes below us. That's good. That's bullish. Let's say 1 hour. 1 hour is below us. I know 4 hours should be below us because that was at like 485. So, you know, again, it's like I could see us having like a nasty sell down just to get to that 498 area, $5 area, and it wouldn't surprise me. But when I look at this 4 hour, it definitely looks to me like it hit that mark. It's very different. I don't know why this kind of stuff happens. I guess it's to do with where those wicks are on the other time frames, but you can see it in the chart. It's very evident. That to me looks like it hit, didn't it? Yeah, it did. It definitely did. Well, that's bullish as all get out. As long as it doesn't distribute, that's a bullish hit right there. It came up and bonked that trend. It's kind of what I wanted to see when it came out. So, man, it's a stone's throw away at this point from a breakout. It really is. So what we'll probably want to see is like a pullback locally that I don't know if we're going to make it. I don't think it's going to happen until FOMC. Again, I'm a little bit nervous about the, and there's no check here on the 6 minute, but on the 4 hour, it definitely tested 4 hour, 180, no, 4 hour, the 4 hour trend did test here, so I'm positive that that's a hit off that 4 hour now. That might be why we may not see that gap fill, but I wouldn't be surprised, again, to kind of drop back low because of FOMC. It's just not a lot of volume. You can't really call a breakaway unless there's like serious volume involved. So this closed at 513 and we definitely didn't hit 513 today. So it's tough. I really hope it doesn't distribute. I suppose the question is, could we come back down and then still advance? And I think the answer is yes, because this is important, because we talk about these four tops all the time, right? And we talk about that idea of crossing down, but I can't put enough emphasis on the cross up either. So when you look at this as a build out, this is not bad. So I did emphasize yesterday, hey, it crossed down. Did it not? It did. I mean, we have evidence of that. It definitely did. It went below here and it got stuck. So I don't want to make it sound like super negative, but at the same time, did it cross up? The answer is yes. Yes, it did. It did cross up. In fact, again, like any way you kind of slice this, it looks like it's basically moving now because it jumped over that trend. So when I look at this big picture, I don't want to overemphasize downside either. That's the nature of those cat ears. They always kind of break something, but you have to pay attention and notice whether they're also going upward, because you want them in that pocket where they've broken above, not just that pocket where it looks like, oh, it's just breaking down, right? That's not what we want to see. So right now, my concern is small. Like, had this come up and broken down and not made that second M shape, not made that advancement, I would be really concerned. So even now, you might say like, well, could it come back down before Thursday? Sure. So if this had a major sell down going into FOMC here, I wouldn't be super thrilled that it came up over top, and it could signal that this needs to try again one more time to come low to 5 or something. But on the whole, if it can manage to stay above here, that would be really strong. And if it needed to spring, maybe we see a spring, but I would prefer not to do this, just to be straightforward. At this point, I prefer it to just keep going. But I can see how this might happen, and it'd be okay. You know, potentially be fine. It's setting up, I mean, unfortunately, it's setting up underneath that supply level, so we're not on top of it yet. We know that 432 is critical. That was a given. Those levels are not gone. I'm just using a simpler chart right now. So this wave here is looking like pretty strong. Pretty strong. And again, just flip the chart upside down and you can see what I mean. Like the push up to try to retest here would not break anything, you know. It wouldn't necessarily mean anything. You might be like, well, it looks like a double bottom, Booksy, and then it's just going to fly back up. Well, I mean, I guess that's the worst case scenario. But I suppose if that happened, we'll deal with it. But for me, I'm like, no, I think this could just be like a hook value all the same. So if we needed to have this kind of drop here, again, not a huge deal. On the whole, it still looks more like that. This is already a hook. Like this particular hit right here was a big upthrust, failed, and then it's dropping. And remember, if this were on like a regular chart, and we were looking at this kind of upside down right now, but if this were on a regular chart, we would be like, that's bearish, that push right there. So we'd have to then be able to say, flipping it upside down, that's really bullish. And I think it is, and that's a positive sign. So, makes sense? There's some chatter about GME going to 8. No, I don't think so. The low targets I have for GME are like 12 or 13. That's where the creek is. You can't get to 8 unless you just go there way, way, way long term over time. That's just fear. That's all that is. It's not going to go to 8 anytime soon if it did drop. I'm not saying it's not possible ever, but the idea of that dropping through the creek, not even checking it, that's silly. Anybody worth their salt would look at that and say, that doesn't make sense. You were in a multi-year massive wedge for like 2.5, 3 years. That is absolutely going to act as some kind of a stopping point. And it's not at $8, it's at like 13 or something. So it doesn't make any sense to me that someone who says is going to drop straight to 8. I don't know where that's coming from, but I just would be like, I don't think so. I'm not saying it's not impossible stuff like could happen, but it's a very low probability in my book. So yeah, I don't have it on here right now, but I can draw it for you if you just want to see it. And you'll see what I mean. It just doesn't make any sense. Like the creek is here. So, I mean, I guess if you were thinking it was going to go to 8, you would think it'd come down here and break down and go to 8. Like you're basically saying it's going to go to this bottom trend. I don't even know, way over here in like by January or something. It doesn't make any sense. Like 12 makes way more sense to me if you're going to come back. Give it a reasonable number, you know. That's your creek. If it dumped right now, it'd go to like 1250 or 1260. It wouldn't go all the way to 8. That's just dumb. I'm sorry. And maybe somebody's looking at it thinking it's like a double flush. It's going to flush up and flush down. That's just not my TA about it. So they're probably looking at some ancient value saying, oh, it has to go here first. It has to. If it doesn't go down to here first, it's never going to run. Or there's some short, I don't even know, that's stuck in the play from like way back here at 8. They're gonna have to do this before they, you know what I mean? It's always something. But I don't trade that way, so I just trade based on the technical setup. This technical setup does not have an S-curve value of 8. It has an S-curve value that leads you naturally back down to, it's just like AMC going back to 3. This is like an S-curve value that naturally leads you back to maybe like 1250. So if you were going to say GME is going to go low, I would entertain 1250 and up right now. I would not entertain below that because it just doesn't make sense. That just sounds like a bunch of fear-mongering to me, personally. Somebody gets it in their head and then people start rolling with it because they're freaking out about downside. And it's like, I had nothing against people that have good questions. And there's a guy that came on yesterday and he said, I just don't see the setup. I don't see what you're seeing. Let me just stop for a moment and explain it. And I did. And I'm talking about this setup right here and as bullish, and he's just saying that, like, I don't get it. That's a good place to be coming from, though. That's somebody that like earnestly wants to know, hey, what are you seeing that I'm not seeing? Because I'm looking at this, it just looks really bearish. You're looking at this saying this could be a potentially really good bottom, but I don't see it. Well, if you're somebody that's like that and it's dropping like this, you're probably going to be more inclined to believe somebody saying it's going to keep dropping to 8 than somebody who's saying, no, it's actually going to turn and head back to 30s. Like, that sounds ridiculous when it's going down like this. You know? And I got to be honest with you, like, I really, really, really respect, without any strings attached, you know, in terms of my respect level, I really respect people that do options chain analysis. I think they have some of the best beads on the market that you can have. But I got to tell you, man, the amount of times that I've come into controversy with people who are all about the options chain is very large. I don't know why that is. There was this one guy, Eagle, and I'm not going to repeat the rest of his name, but Eagle in my whatever. He was really all about the options chain. And he was one of those people that he was like, you're wrong, it's the options chain, it's got to do this. And when there was like one time, it wasn't even like a big deal if I remember right, but there was like one time where I was like, I don't think so. I disagree. I think the options chain is just as manipulated as everything else. And so you're going to see falsified data in there as well. You're going to see manipulation there as well. I don't think it's the end all be all like a lot of people say. And I'm going to just stick with the TA. And then I ended up being right. And he left. He left for like 2 months. He came back. He said it wasn't because he was wrong, although I didn't even call him out on it. But then he was one of the first people that left the group and started like trashing me and all this other stuff. I found out later, and I'm like, well, I wonder why. You know, was it really because of something I said, or is it because he got it wrong once? It's not even like, it wasn't even a big deal. I really wasn't even thinking that much about it. I was like, well, you know, okay. Because sometimes folks in the options chain get it absolutely right, just like folks in TA get it right. You know, but I don't get this idea that options is somehow not TA. I don't get that either. And there's people out there who say like options isn't TA, and I'm like, well, maybe it's not technical analysis the way you think about a chart. It's not charting, but it's technical analysis. You're analyzing a technical aspect of the market. It's still a technical analysis. The idea that Roaring Kitty had about the mother of all short squeezes is a technical analysis. He's saying that there's a specific underlying principle that happens in the market due to certain factors, and that's what could cause upward movement. I don't see how that's not TA, but because it's not on a chart, people think it's somehow completely inoculated, it's somehow completely different, and it's not manipulation. And I'm like, okay, like I don't get that. Like, so lately I watch a lot of people, and I've been watching people who are doing the options chain, and they're just like completely like, I don't know what to tell you, but they're like seems like they're completely lost. They have like no answer for this. And I'm like, well, I don't know if you need to have an answer for it to be able to trade it, but I don't think that the technicals ever gave up. I don't think it was like somehow there's just no longer a technical analysis. So when the guy asked the other day, like, well, what are you seeing? I'm like, I mean, it could be a number of things. I'm not saying it can't drop lower. I'm not saying there can't be a spring action here. For all we know, this could end up being like a spring. You know, it could drop low for all we know. But the idea of this as a bottom is not based on around like a single principle. It's based on like a number of things that I'm observing as it's coming down. And that's technical analysis. So it's strange to me because TA doesn't ever sleep. It doesn't just like go to bed and say, well, oh, going down, I guess that's that, you know? There are times where I might say, hey, it made that move, now it's going to continue. There's continuation. But this idea that you somehow the technicals just stop working, that doesn't make any sense to me. I've never, ever found that to be the case. Ever. But if the options chain dries up, you got nothing. You got nothing. You got T35 dates, and that's it. I mean, it seems like that's what everybody holds on to, is like OPEX tailwinds and T35s. And I'm like, I don't know. I feel like there's more out there to it, so I'm going to keep doing what I'm doing. But I just got to say that because it seems like lately, especially on GME, there's been very little answers for what's going on here. And I'm like, I don't understand why people are so opposed to using analysis when it does work. You know, when it works, period. And you can find it, aggregate data that works. You know me, I'm just a big advocate for it at this point. It might seem like an insecurity, but it's really more about the fact that I genuinely believe in it. So I'm like confused when people are like, no. And I'm like, okay, I don't know what to tell you. You know, like how do I even talk about it then if you just don't think it matters and it doesn't work? It's hard. So we had this S-curve up, and I said yesterday that I thought maybe, I'm going to show you what I did. I thought maybe I drew it wrong. I thought maybe it was like this instead. It could actually be way over here. So at widest, there's like 3 spots. This is, again, one of those things where it's like aggregate data, right? And you can see how evenly spaced they are. I think that's by design. Like one of them is the breakdown here. One is the intersection of the bottom and the breakdown here, and the other is the middle point and the intersection of the top. And mathematically speaking, like any one of those 3 could be like an S-curve central point. So it's a difficult one because you're like, well, then I have to decide where the middle is horizontally. That one's easier because I feel like there's only one real obvious center, and that's at 514. But everything else is kind of questionable, I suppose. And this still has a top at 585. So yesterday I was talking about 585, 586. It's not gone. I just closed my chart up so I could show you some other things. If you want the messy chart back, it's right there. It's the same thing. So you're looking at me measuring this like, oh, you changed it again. No, it's the same. It's the same measurement. I'm measuring it like slightly different, I guess. There's like a penny or 2 off here, but you know, it's the same thing. Right? So when I look at this, I don't think that this is like that complex, you know, in some ways. I think that you're probably going to see what we were expecting to see, which is either you will or you won't find support around 532, and that's going to be a big one. That's a huge level for us to break. This is like a midpoint level. You will or you won't find support above 558, right? And then everything else here is just extra. Like we can use it for analysis. If I saw this S-curve and I thought this was probably going to go all the way up, I would be more inclined to use the middle one myself. It's just my preference on it. You can do it really precisely with snapping, or you can just kind of eyeball it. It doesn't make a huge difference. Either way, you're going to be like a penny or 2 maybe off, but not a big deal. This is the way I would measure it because I think from a technical perspective, it's the simplest way to do it. It's a 50-50 from the bottom at 454 through 515 all the way up to 586. What does 586 do for you? Does it do anything really positive, Booksy? Well, yeah, because if you look at where 586 is, it's above obviously all these other tops. I don't think in and of itself it means a whole lot. Right? When we go backwards in time, you can kind of tell that maybe back here, there was some kind of significance to that number. Like early on, this was like an upthrust at like 581. And perhaps when it built out the top, like where would that SOS be? It'd be somewhere between 548. I don't know why I put 558. It should be 548. Somewhere between 548 and maybe this top at like 581 or 582. That would be the only thing I would ascribe any significance to. And if you go to look at 586, it's actually a support here. That looks like that's the bottom. Could be 585. This is 585. So yeah, that's it. That's about the only reason I might pick that out. And that's just going backwards, looking at those tops. Like, why would that be a significant number to come to? I don't really know. Is it an SOS? Yes, it is, because this is the buying climax over here on this kind of major reactive move up. But you have to remember, at least from my point of view, this is all a reaccumulation. So this was the bottom. So right here, if it dropped low down here, this is the bottom, and then this is the top. So this is actually like a buying climax here at the top, so to speak, on the reactive move. So if you're looking at a reaccumulation, that's what that is. So this is the bottom, primary sell-off. This would be a buying climax on the way back up, highest amount of buying and volume. And so the rest of this is actually built out then differently. So this is in some ways maybe an auto reaction and a phase B top. Obviously, like coming over that phase B top was a big deal. That's what bothered me the most coming up here. I said that repeatedly, like I didn't really like that happened, that it came over that phase B top, bugged me after coming down. It is what it is. You know, maybe it's an SOS with a backup locally, and I had this on the chart. I'm kind of rebuilding my chart, but I had this on the chart for a week or two in talking about, you know, all right, well, where is that at? We had a couple markers there that were significant, and I think this one actually went a little higher than where the bottom came down to. It was like that, and it comes from the buying climax. So is it possible that that is a SOS with a backup? I guess. It's a weird one because it came all the way back down to the floor, but we don't have to overthink it if it advances. So if it goes up to the top, absolutely, this is kind of like either going to be a UTAD, where this is a UT and a UTAD would be up at the top here, or it's essentially like the breakout, you know, and everything else from there is just analysis on that setup. So the rest of this was really more about whether we need to come back down first into earnings. That's what I had sort of speculated, was that, you know, if you advance at this particular rate, you might have a pullback at a similar rate, 56 degrees or something like that. And that gets you into a pretty sort of a tight triangulation pattern that I thought was pretty powerful. I don't want it to break low. That's not my goal here, but it could easily triangulate to give you a really simple pullback, which often happens for AMC before we advance. And I'd have to find maybe another reason for this perhaps, but this would be a pretty solid one. So if we hold right now, do I think we're going to go back down? No, this is just there from earlier. I think he would drive the price up, and then this was my idea. I don't know positive about it. You could see it basically build out sideways from this S curve, and then it could still technically come down before Monday. If the goal was to get it to like 550, for example, like you could easily do that before Monday, right? And then that puts you in a position where you're kind of retesting these levels, you know, chopping around the 550 mark. It's just one concept amongst many. And that could be, again, part of that build out. A more bullish person would probably look at it and say, I think it could probably stay up high. Maybe it doesn't go back below 550, you know, and that would show support. So then you'd be ready to go on Monday with just a buy-in. Either one's fine. Yeah, I know. I believe option chain is TA, yeah. I don't like Twitter, so I'm done with it. I'm never going to go back. I'm done with it. It's way too dramatic, way too much garbage. And you might say like, hey man, just don't engage with it. But you can't block out Twitter. I mean, Twitter is just all over the place, so it's not for me. I mean, anybody can say whatever they want there, and that's fine. There's nothing wrong with freedom of speech. It's just I don't have to engage in it. I also have the freedom to just not do it, and I'm not going to do it. So I'm done with it. I'm not going to go back. I really could go back and deactivate it just so it's not there. That'd be easy enough, and then people won't ask me about it. But maybe that would be the polite thing to do. I'm kind of just over it, I guess. That's all there is to it. I had too much stuff on there that happened all at once, and I was like, this is just trash. So, I'm done. And I don't like the idea of being like a center point of like controversy or drama. Like that's not my goal here. So when that started happening, I was like, well, part of it might just be my temperament, you know. I'm not saying I'm autistic or something, but I have a tendency to say things that sound really standoffish, and I don't really mean it that way, but I don't know if it's just the way that I'm saying it or whatever. But I genuinely like don't want to. It's not about fighting. It's just I just don't want to like. I'm not trying to be a jerk, but that just kept happening where I would like say something, and so you're like, well, maybe I am just a jerk. Maybe I'm just a jerk, you know. Sometimes when I say stuff, and I'm not really being as empathetic as I need to be, and that's fine. But then why be on a platform where that's going to like highlight and cause problems, and you know what I mean? There was a lot of stuff. It wasn't just one thing. It was a lot of things over time. I got drawn into the AMC community in a kind of through the back door, and it was in Dave Marino's Discord group. And he featured me on like some of his chats and channels and stuff, and then I really appreciated it because it gave me a platform to talk about the stuff I was doing with fractal analysis at the time, and I have no hard feelings about it. But the people that were in that group, like him and Rico and that other guy that came up with that dilution theory, and I mean, and then I was also in another group, and that group was like breaking apart. I mean, just talk about middle school girl drama or something. I mean, it was like left and right, just constant. These are grown men, you know. And yeah, and then I guess for a lot of people, I overreacted. I mean, with the chart data thing, I felt like that was a really messed up thing to happen. I still think that's messed up. I petitioned about it. I wrote as many people as I could. I got on a Trades channel about it eventually. But people just didn't think it was a big deal, and they thought I was like complaining or being like over like hyperbolic about it, I guess is the word. And I just kind of gave up on. That's kind of when I was like, you know, what this turns into is it turns into a thing about personalities and drama instead of data, and you can't call somebody out on anything without stirring up personal drama, you know, on that platform. So I was like, you know what? It's just one more stressor in life, and I don't need it. So got rid of it. And I've been way, way, way happier. And I know, man, you'd be like, the therapist in you is like, well, maybe you just need to learn how to deal with stress management. And I would say, I know. I am learning how to deal with stress management. maybe I grew up in an environment where nobody taught me that. And now I needed to learn how to do it. I don't know. Maybe it's just me. And that's okay. That's the thing is like, I can't know for sure. Like I was just doing the best that I could. I probably could have done better. And if it's me, it's me. But that's not like something that I have to like subject myself to. So that was the reason I was like, well, I'm not really going to miss it, and I don't really think it added anything, because ultimately, like, people were only like really listening anyways, and like videos have been the only format that made any sense to me for TA, because you can post a chart and people just sit there and go, that ain't going to happen, and then you have to sit there and type out a billion hours worth of like explanation, and it's like, then when it doesn't happen, people are like, oh, see, we're still waiting on this target. And that's what happened to me. People would come back like a month later and be like, hey, we never hit this target. And I'm like, well, we kind of did. We kind of didn't. But I don't know what to tell you, except it's just taking longer. And what a waste of time that is, like, to just sit there and type up long-winded arguments that no one's going to read, just so one person who's really ultimately not that interested, they'll drop you at the it's like the guy that unsubscribed the other week. It's like, they'll drop you if you say something wrong. It's like, well, why would I spend an hour or more on Twitter of my life, my human life, on this platform, talking about something that you have no idea if it's being received. You can't explain yourself, quickly. You're very, very like invested in it yourself, and it's so easy for that to just become drama. So it's just not, I don't think it's a good platform for it. And that Nick P guy is a great example of that, because he got railroaded for getting it wrong a couple times, and now he's like this, it's like this joke. And I'm like, people did the same thing to me, y'all. Like, it was no different. People did the same thing to me. I got it wrong a couple times for a couple weeks in a row, and I would see people posting on another person's platform. They'd be like, yeah, I used to follow Booksy, but he's been wrong for like 3 weeks. He's definitely off, They were just jumping from person to person, whoever they thought was on like a hot streak or something. And I'm like, that's not... My goal wasn't to do stuff like that. It was to be in like a more of an educator, in terms of like, hey, come with me while I'm trying to like figure this stuff out. It wasn't meant to be like, who's the best, who's got the best TA, And I found myself acting childish too, where I would post something and I would get like straight up envious almost, or jealous of someone else, because I would post something and then I would be right about it, and somebody else who has like a higher platform would have posted the same thing, but they would do it like weeks later. And then, I mean, talk about childish, right? So just self-indictment here on myself. Like, I would sit there and go, man, I don't get why. This is the trappings of social media, right? It's like ego. Like, I don't get why people didn't like what I put. I put the same thing. Well, because this guy's got 100,000 followers or whatever. He's treated like he's some kind of like guru, And to some degree, that's true, because the culture of Twitter is one of popularity. Like, it's built into the very design, the idea of followers and likes, and like everything is numbers based. You get more numbers with more likes and more this, more that. So if you want to know why I don't ask for likes on this channel, it's because that's not my goal. And if I make it my goal, it's bad for me. And I don't want people to feed into my ego. That would be really bad for me, and ultimately be bad for you too, I think. Because I'm going to let you down. I'm just a person, It makes more sense for you to just kind of come in, take what you want to take from it, talk to me about it, whatever, and then just leave it at that. It doesn't have to be like some kind of weird, we got to pump up the algorithm, and I got to make sure I get enough views and all this stuff. That's not going to help anybody. It's just not. You might think it would help me, but I actually think it probably hurt me more than anything. Some people, I don't know, maybe there's people out there in the world that are just built super humble like, and they can like deal with that stuff and not let it go to their heads. That is a vulnerability for me. Like, I get way too into affirmation from other people. Like, it just kind of hooks me somewhere deep down. It like hooks me, and I'm like, oh, it's like somebody like kind of in a dark corner, like, hey, come over here, check this out, You guys are like, it's like the door-to-door salesman, Booksy. Yeah, it kind of is. That's just not right for me, so. And I know, man, that's the thing, is people are like, well, just grow up, dude. If you know that's a problem, then just deal with it. Yeah, but that's like telling somebody who's in Alcoholics Anonymous, like, hey, man, just go to the bar and just man up. It's like, no, that's not how that works. You don't put yourself into high-risk situations so you can test your manliness. How irresponsible. You manage it by like avoiding those problems, altogether. That's the best way to deal with some of that stuff. Is just don't put yourself in that situation. You're being proactive by doing that. You're being responsible. You are manning up by admitting that you have an issue and then not engaging, But for some reason, there's this weird culture of like, you have to put yourself into harm's way in order to like test yourself. And I'm like, yeah, but that's going to happen. You don't have to like force it to happen. You're an Alcoholics Anonymous. You're going to show up at a friend's house one day and they're going to have drinks. Like, it's going to happen. But you don't need to go out of your way to make it happen, to like prove something to who? Who's that proving anything to? Some random dude on the internet or something, Like, give me a break. That doesn't make any sense. So I feel the same way about social media now. I'm like, I'm just happier without it. Like, I focus more on my family. I don't fall into the trappings of like looking for affirmation from other people. I tend to be very like focused on this, which is a lot better. I think it's healthier for me. I like the format better. It's still a little egocentric. You can't avoid that when you're the only one talking, but at least you have the ability to like observe things and like talk through it in the moment. If you disagree with somebody, you can like look at it and talk about it. You don't have to like go back and forth in like a weird chat environment. It's just bizarre. Anyways, let's stop being like psychologists here. Let's just work on, you guys are like, great, good therapy lesson, Booksy. Appreciate that. Now, can we talk about charts, please? Because I don't come here for your mumbo jumbo. Yeah, I know. I know you don't. This is a setup that, again, on GME looks okay, but I had mentioned a couple times yesterday and today that what I sort of thought might happen is a rounding top with some kind of a drop. I'm not positive that's what we're seeing just yet, so don't flip out if it doesn't drop, but I still think we're looking for that bigger move down. It should have rounded up against this, and it did. And then what you want to see is, GME is a little different because sometimes GME does a flat top and then breaks out. AMC doesn't really do that very much. AMC prefers the drop. I like to see the drop because it shows me strength. And you guys are like, I don't get it. Why would you want to see it drop? If you're like that, just imagine that you're trying to like push the stock down, but every time you push it down, you're getting like a springboard backwards. I love the idea of sellers trying to push it down and going like one step forward, 2 steps back. And then trying like this Hail Mary to like drive the price low and then it just reversing on them. That's the idea of a spring. So if you're looking at that, like, I don't want to have a sell test, just remember like that's the strength test right there. So having this kind of drive up to the resistance is good. It pushed 23. That's good. It came above, made higher highs consecutively here. 1, 2, 3. Now it needs to have like a strength test and show that we're not going to go down again. I really want to see it do it, because if it doesn't do it, and I would love for it to be a gap fill, to be honest, but if it doesn't do it now, you might get a strength test later that's like way bigger, more dramatic. Good example of that, maybe back here when we first came down here. This is a good example. This is what I mean when I say like strength test. So here we have like a real mild strength test right here. It's not really mild, it's still pretty heavy volume, but there's a strength test right here, and then there wasn't another one for a while, and it pushes up and kind of approaches the creek again and is like pressing against it. This is back in May. And then you get this really dramatic strength test, and then there's that big reversal moment, and that kind of trepidation into a strength test can be a bit frustrating. Like one was right here as well. Like you get these giant like kind of double flushes. I prefer to go ahead and have it now, because I think if we don't, there could be an opportunity for one of those kind of like big pump up, drop down kind of moments here later. And I don't think it's bad. I just think it would be kind of painful. So I prefer to have it happen now. I prefer to have it drop down now. Try a big sell off right now. You guys are like, no, go up. Don't listen to Booksy. I'm just saying, if it doesn't do it now, you might get this really nasty drop later. So this is fairly common in the market. You need to see it in some ways. Hate to see it in other ways, but I would say if it does it, it's probably going to be here for this gap. I think this is probably what we're going to see. See how like this is like a really nice whip around of $23? You see that $23 mark? So you're building right now below it. If you push up above 23 and kind of slingshot up, you're going to end up hitting this creek up here. And the distancing between those may not seem super convenient, but it actually is, because now if you look at the distance from 23 to the top and 23 to the gap, that's the same distance. So I always think about stuff like that, because again, if you don't get it now, it leaves that door open, and you could basically see how this could be a very simple like boom boom, like boom boom being like a 50% whip around. So it would not surprise me at all if by not going for a gap fill now, you end up driving the price up high, hitting this creek, testing it, and then having basically like a 50-50 drop all the way down to the gap fill again. And that could be a strength test on this floor around 2280. So, yeah. You've been looking at charge point all day. I'm with you. I get you, Notion. I feel like your assessment there is right, but maybe social media isn't the best way to do that. So I don't know. That'd be my only real argument. I get what you're saying. I mean, technically, this is some kind of a social media, because it is social, but it's not quite the same, right? Because this is like business oriented, it's a little different. We talk about different things on here, but it's almost always centered on the business of the market. So it's more like a forum as opposed to like social media where people are like posting just opinions about everything, right, in the world. I get that, but we're losing, and we're going to keep losing it. I think AI is going to do us a disservice in the long run. We're losing the ability to communicate effectively. I'm watching the Olympics, and I'm just dumbfounded by all these AI commercials. There's just so many. And they're just so many. I mean, Microsoft, whatever it is, Copilot, Google's got their Gemini, Salesforce has Einstein. I mean, it's just every other commercial is like about some great new AI helper. And what bothers me is the stuff they're showing is like things that you used to have to do manually. You don't have to do it anymore. Now you can have a robot do it for you. You guys are like, it's not a robot, it's AI. Whatever. You can have an artificial intelligence do the work for you. I don't know why that bothers me more than I think it does some people, but that really bugs me. Like, there was one thing they were like, hey, help me to write a business proposal. I was like, somebody typing in, help me to write a business proposal. And I'm like, huh. So let me get this straight. So you're going to go and show a business proposal that an artificial intelligence wrote, not you, not the individual, and don't tell me that you're smart by going to the AI. You didn't write it. It's not coming from you. It's coming from a robot that can source all the data it wants to. That's weird. So if I'm looking at your business proposal, you're telling me that your business plan, whatever it is, that if the push comes to shove, you're going to have to go back to Google Gemini and figure out how to fix it? That's messed up. Think about that. You're now going to hire people who have resumes that are built by AI, who have cover letters that are designed by AI. These are the people that you're going to rely on when push comes to shove, you know? And don't even get me started about education in AI. Just already, like, people don't know how to read and write anymore, for Pete's sake. People don't know proper grammar because of social media and stuff. And it's like, that's not good. Now you can have AI write essays for you, college entrance essays. How in the world are you supposed to check that stuff? Well, you get another AI to check it for AI. This is just such a slippery slope. I find it to be just kind of gross if you think about it. I mean, I get why human beings would be attracted to that. We love not having to work. We love making things easier, but it is not always good to make things easier. It just isn't. Because again, like, eventually you're going to need to ask that person, what happens if the business plan starts failing? You're not even relying on that person that you asked to write the business plan. You're relying on the AI program that wrote it for them. I mean, that's bonkers. So these people could have not know a single thing about what they're talking about, and they've managed to convince you that they somehow know about it because they're using AI. I mean, it's just crazy. How do people not see that? I just don't get it. Like, how could you not see that as a problem? You know? That is such a huge deal. It's going to change everything, and I don't think it's going to be great. I am sorry. I really don't. I think we're going to be in a world full of people who don't know what they're talking about, and no one's going to actually know how to do anything except for the people who are designing the AI programs. Because you don't have to be an expert. Google kind of did this too. You could Google anything now. You could be an expert, quote unquote expert in whatever you want to Google, but don't even get me started on the arts. It's sourcing people's artwork and copying it, and it's all kinds of crazy patenting issues that I won't even get into, but it's insane. It's insane if you think about it. It is literally like the most insane thing. And I'm all for, like, technology. Don't get me wrong. I'm a huge techie person. I love that kind of stuff. I love the ideas that AI can bring to the world about solving problems that we can't solve easily. I get that. But this idea of, like, and all these commercials are showing people, like, draft an email for me. And I'm like, draft an email for you? That's their selling point? Draft an email? You mean write a simple note? Like, basically write me a sticky note to the company that's appropriate? You mean you can't draft an email? A professional email? And you're a professional? What? And you guys are like, it's just to save time, Booksy. It's just to save time. You still have to spell check it, which the computer does for you. Come on. There's already spelling and grammar checks. Think about it, dude. That is crazy. I get it. It's not all bleak, but I'm not saying it's all bad. You got to hear me right. I'm not saying, like, there's not a place for it. There's definitely a place for it. I do think so. There's certain things that AI can do because of the reach of it that it's almost incomprehensible for people. Like it would be really hard. It's like a lifetime of work. Do I think AI solves the problem of cancer or something like that? It could, because it can have access to all the data all at once. And a human mind can't really do that in that way. So like there's something about it that is very appealing because I think it could be this great tool, a tool, right, for problem solving in some ways. But I just find it to be so like, it's so unsettling to me. And I'm not even like an old person, but I grew up at an age, like half of my life had the internet, well, early parts of my life, half my educational life had basically had no internet, and then half of it did. And so I was there for the dial-up modems and the first time we got internet in the house, that kind of stuff. But I remember how dynamically it changed when I was approaching like later schooling age, like how all of a sudden it was like, oh, this internet is somehow like a greater window into everything that you need to know, which is fine, but it's also an easy way to kind of manipulate or cheat, basically. And people were getting in trouble all the time for like cheating, you know? And it was like, that wasn't even AI. It was just people buying essays online and stuff like that. And you're like, why would you do that? Well, because it's easy. It's easier than like doing the work, I guess. Yeah, and the copyright stuff, don't even get me wrong. That's the crazy thing is like it's all copyright. Like all AI does is source things. So it's literally going and taking everything and just repurposing it. And for the record, like everything is derivative. We don't invent anything new anymore. It's not like somehow like the AI is doing something brand new, but humans do it too. But we're different because of our capabilities. Our capabilities limit us. We can't copy everything. Like you might think that you're, Van Gogh, but you try to go copy a Van Gogh. You can't do it just easily. You'd have to learn it. And so that takes years and years and years and years and years and years and years of practice. Even if you wanted to be an art thief and create forgeries, you'd have to be talented. The forgery, people that do forgeries of like great painters, in order for them to get away with it, they have to be ridiculously good. So they're still really talented. It's ironic, right? Because you're like, oh well, they're obviously not that good if they're copying, something. Well, it takes a lot of work. People that do the art restoration have to do that too. They have to mimic style, and that's different. They're doing it obviously with a different purpose in mind. But yeah, I just find it to be crazy, man. I was watching all these commercials on I'm just sitting there talking to my wife about it. We're watching all these commercials on the Olympics, and I'm like, what the heck, man? Is this still a big problem for people, like writing emails? And my wife's like, yep. She works in like more of a corporate environment, I guess. She's like, yep, people still write horrible emails that don't make any sense, and they're super inappropriate for workplace. And I'm like, why? And I hate to say it because it's going to make me sound like I'm grumpy against young people, but it really is like mostly Generation Z and up. Like, I hate to say that. I'm not picking on you if this is you, but you might be a genius. You might be a novelist. But I got to tell you, it's mostly the younger people who grew up with the internet who have never experienced anything else. And that's crazy to me. So I don't know what that means, I don't think it's everybody, but I think there's a larger percentage of younger people who it affects disproportionately, perhaps. Not everything that old people do is great either. Don't get me wrong. I'm not being an ageist. I'm really not. There's plenty of problems with the older generation, and my generation, for that matter. Every generation has issues, but that's one big one that, like, I'm like, man, what the heck, dude? How did you get away with not learning how to write an email? Like in a professional tone. How did you enter the workforce without that being a requirement? I just don't understand it. You don't believe bruh is a period to a sentence? That's really funny, dude. Yeah, but I think AI is a difficult. Oh yeah, I remember that Wikipedia being a problem when I was coming up in the later years, going into college. I remember it being that an issue. See, I went to college. Literally, the year after I went to college is when they made like Facebook public, because it was only for. So that's another thing, is like I was hooked into that social media pretty young, like as a young adult, and I didn't have it before then. But when I went to college, it was like, oh, now there's this thing called quote unquote social media, and Facebook was only for colleges when it first started. You had to be a college. In college, you had to be. It was like a networking tool for college kids, basically. And then I remember like the next year, like a year later, when I was a sophomore or junior or something like that, then all of a sudden your parents were on Facebook. And they're like, it's no longer a tool for college kids, it's a tool for people to reconnect, right? And that's when it started getting crazy, because then a year or two later, it's like, oh, now there's advertisements, and now they've changed this and that, and it's like Twitter's there and all this other stuff. I mean, it escalated really fast. So that generation that grew up, younger generation that grew up, they grew up with social media as a norm. They're very different because they've had it since they were kids, like little kids. You know, it used to be you walk down the street, you say hi to somebody, you meet them, you don't know anything about that person, but you just get to know them like normally if they're going to become your friend. Now it's like you got access to everybody's personal information, and like you can see them and what they're doing, and they make their life look like better than it really is, and you got instant feed to like all this noise that your friends are making, and maybe enemies are making, people in school that don't even like you. I mean, talk about just eras of depression here. I get it, man. I do. I sympathize. It's not like I'm trying to beat up on people. I know I'm saying like, hey, you don't know how to write an email, you shouldn't be in business, but which is true. You should learn how to write a good email. But also, like, I grew up in this environment that's just so unique. Like, it's hard to be too hard on those folks, because it's like, well, think about what happened, what were they dealing with growing up? Your mom and pop, who were born in like the 50s and 60s and getting older now, they didn't have those problems. Yeah, they had bullies in school, but the bully was there to physically hit you and take your lunch money, But then when the bully wasn't there, you were free. Like, aside from gossip, maybe, you were free. You could just go about your business. You don't have to think about it. Nowadays, it's like, oh, the bully goes to social media, and they're there 24/7 watching you, stalking you, and like saying nasty things. I mean, it's just completely horrible, And that's the challenge. And look, guys, I got a young kid. I'm going to raise a kid in the same environment. It's like, how do you deal with that as a parent? You got to I don't know. You just got to make an effort, I guess, to really make sure your kids are aware of who they are and they don't buy into the stuff that they see online. And I can only imagine, I'm going to do everything I can to be there every step of the way if it's possible. But eventually, they're going to be on their own, like surfing the internet, looking for whatever. It's hard. So there's great benefits to those tools. It's technology, right? AI, social media, there can be great benefits to it. But absolutely, I think it hurts. It can hurt culture in some ways that are unforeseen till the generations come up. I mean, imagine living in a world where AI has done most of the work for kids, and then they grow up and become adults. And then who's making stuff anymore? We're going to get to a point where we're so over-reliant on it that we just don't know anything. Like, you could grow up and be a complete idiot and work at a nuclear facility, And That doesn't make any sense. I know that doesn't make any sense, but that's the slope, I guess, of like the technology trends, you know? So, yeah, they know a lot of crap, unfortunately. They know a lot of crap that you don't I was never exposed to some of the stuff that kids are exposed to. I mean, when I was a kid, I'm not saying I was sheltered, but it's like it was way easier, I guess, for my parents to kind of control media. The media I saw was like VHS tapes, it's like that's about as far as it went. I'm being genuinely serious. Like when I was a little kid, my parents didn't have like cables. We had like regular TV, and you could watch Saturday morning cartoons for a couple hours. But then that was it. Then, I mean, if you wanted to watch a movie, you had to go rent a VHS. Like, that was how you got access to media. So, like, the things that you saw and learned outside of school were pretty limited. I mean, that's why you would spend time in the yard, because it was a hassle to... it was a hassle to get... It's like, yeah, I'd rather just go play outside. My parents aren't, here or whatever for now, and brother or sister babysitting. You're not going to, like, sit there and watch old VHSs all day necessarily. It was a hassle. It was like, I'd rather just go outside and play basketball or kick a ball around. But now it's like, oh, you just log in and you got billions of hours of whatever you want to watch. I mean, it's hard. How do you even, as a parent, you're like, wait, where did you learn that, Some of it's good. I love that my son knows so much stuff about outer space that he can like school me in astrophysics, and he's like a kid, I love that kind of stuff. But at the same time, it's like, oh, he says a word, and I'm like, where did you hear that? Where did you hear that word? Do you know what it means? And usually he's like, I don't know. I'm like, yeah, okay. That's what I thought. You have no idea. This is fine. It looks fine for a charge point. I wouldn't call this an inverted head and shoulder or anything. I know someone was talking about that. I mean, frankly, it kind of looks like a flag to me. And I had mentioned previously that I thought that it might be necessary for this flag to break down first before it goes back up. It is on the edge here of a trend, so I don't know if that's going to happen, but it wouldn't have surprised me to see this drop low before going up, because a lot of times these kind of flagging motions, they do have like a head fake directional change. It kind of erases the precipice, I guess, of the flag. Like the flag itself is kind of potentially is a low volume flag going up. It looks a little bit bearish. It looks like there might not be continuation, perhaps. That's just the way I would read it normally. And all I'm really seeing is a very, very tiny little drop here. The retest here on 2 is not unusual. That was expected. We figured it would come back down. But it's the nature of this that I'm like, I don't know. I almost rather see it go down first, because that would make me feel a little more sure about the upside. If it goes up first, I'd be a little concerned about maybe even a double top. And I don't want that, because I think charge point's gearing up to go far. So it's just a matter of opinion, I suppose, on what you'd prefer to see. But I find that a drop would be better in some ways, because I'd be like, all right, well, you can kind of erase that flag. If you drop, it's just gone. You could return to near the bottom of the flag. You can come back down to 192, and it's not a big deal. And it's basically just like a little spring locally, maybe beneath 193. That would be pretty good. I would be happy with that. So I had drawn this on there. I just deleted it a minute ago, but that to me looked like the best. I don't know. I like that better than the way it looks now. But I suppose if it finds support, it finds support. And you just want to see it come above here at some point and create a nice top before moving on. And I don't know exactly what it looks like, but that's just generally how I'm going to draw a top. It's just a zigzag. Essentially, you want to SOS around about 240. So charge point's looking okay. I'd actually kind of prefer to see it come down again and not break this creek high, but break it low. So break it after another pullback beneath 192. If it did that move right there, I'd be pretty bullish. It dropped here. I know it doesn't seem like it would be bullish. I get it. But typically you want to see that bouncing motion. This kind of chop upward motion is more commonly associated with a flag. So I want to see that erased. I don't want to see it jump up and then drop really, really low because of the flagging motion. And I'm not sure how low it would go. I suppose the flag itself is not that dramatic. Kind of looks like a zigzag, like a 1, 2, 3 correction. So maybe at worst down to 180s if it does go down. And it's just a matter, again, maybe there's a trend here that's going to hold. And instead of doing that, we're going to push up. And then it's going to have like maybe a different kind of approach later. Where it builds out and then comes down and hits 220. And that's where you're going to get a bounce. I would just want to see that at some point. So I'd be a little nervous even there because this could still be within that flagging motion. It's just tricky. I don't know. Flags are not all bad, but it's just that elevated one is a hard read. It's just a hard read. I don't know for a fact, but I think on Bulkowski's methodology, you would look at that and it's just a statistic. So it's like statistically this breaks down more often than it breaks out. But that doesn't mean it's like super weighted. It's not like 70-30. It's usually like 55 or 60% of the time it breaks down. You know what I mean? And that's still a pretty large percentage of the time that it might break up. Don't quote me on that, but that's usually about what these are. So they can go either way. It's just I would prefer to see this as opposed to just that. Hard to say. See, I think this kind of a motion would give you a probability of going up into the early August. And this is kind of what I want to see on AMC too, is like this nice build out. So we'll see. And I could be completely wrong. It could come up and build out this way and then go. And big picture, you just want to see a creek jump. You want to see potentially if it's going to bottom, maybe it holds this upward trend or it dips low real quick. And then you want to see it SOS, find support above this top, which is 224. That's the big picture analysis here. So that would be a sign of probable continuation. AMC just kind of chopping right now. It's the middle of the day. We're getting nitty gritty here. So we pumped up. The volume looks good. A lot of it's centered here, which is in the middle of the move, which is fine. And then the rest of it's kind of like peeking into this top. Usually it's better if the volume is going down. It's usually a little bit more bearish or bullish if the volume, as it's driving the price up, starts high and then the volume kind of lowers when it gets to the top. Typically a ramp is a little bit more bearish, but it just depends on where it is. Like, so where is this? That's going to be the question. This does ramp up into the top, but where is it? It's above. So, at this point you're like, okay, well, there's a support here at 530s that could hold. So that ramp might not dissipate in some kind of huge bearish action. But then the other question would be like, well, where did it find support finally when it left? And this isn't quite where the creek is. The big one was coming down here. That, I think, found support and left. This one, on the other hand, is different. So this is I'm going to look like this. I think this is probably it here. Yeah. It looks to me like that is the one that was adapted as support. So there's two peaks, two highs right here on this previous trend. Not the highest, the buying climax, but the other two. So if you're looking at this like it could be an SOS, you would look at the top, which is 534. Maybe better to call it like an LPS at this point, just a last point of support as it's rising. And then you look at, well, where would it maybe back up to? And I'm seeing a potential to come down to the 520s still. And I don't think that puts you in necessarily in a really bad place. You could still have an advancement later in the day. So as we approach the FOMC meeting, that seems to be likely. You could end up chopping here for a bit. Let's check the fib level on that. I know I was talking about on AMC maybe coming back down. That's a double top at 537. Interesting. If you remember, 537 was one of those doubled up levels. It was a middle level. You guys are like, what? Remember the 50-50 levels that we drew out? 537 was it was 537, 538. It wasn't actually 532, which was surprising to me because I thought 532 was the level. But when I did the double up from like 470s, it was actually 537. And that level is kind of sneaky. It is there. It acted as like a secondary support. There was like 532 and then 537, 532 and then 537. So it wasn't the one I talked about the most. I talked about 532 a lot early on. And I thought 532 was the big one, and I still think it's important. But it was actually 537 that came up when I did the 50-50s up. So mark off both if you want to, but that's the one that came up. So I'm just telling you. And then it doesn't look like there's a chance to do any kind of solid retracement right now from 537 back to 511. None of these retracements give you the gap fill. So a gap fill would have to be basically a throwback at this point. So if we were to come all the way back down and fill the gap today for whatever reason, or even tomorrow, it'd have to be like a throwback, essentially. Like you'd be coming all the way back down to, I don't know if it could happen all at once today, but maybe tomorrow, top here and come back down. And that might not be that big of a deal. We might see it as like a problem, but really look at this, you know. This seems likely to me, so I don't find that to be necessarily problematic. So if we wanted to come back and retest this again, that's where we could do it. ChargePoint is exactly, they're an EV supplier, so they don't actually create EV vehicles. They create charging stations, and they supply like the technology and stuff to do that. So they're one of the largest in certain markets, and they're if there's like a top 4, they're in the top 4. I would actually say they're probably in the top 3 because there's 3 that always come up in groups together because they're kind of the most important. The problem with ChargePoint is, as you can see, it's had this massive slide over time. So the reason I talk about it a lot, I liked it back when it was higher priced, but I also think that it's sort of like AMC in the way that it built out, and it's basically come down from about $10 to being really far, and then it's kind of a big double flush. So I think it's going to have a return over time to back to 10. So in terms of waves, it's in a good spot to potentially see a big breakout this year or next to the upside. I think that happens over here somewhere, probably near November. Just depends. You know, you probably won't see a huge rally if, like, a Republican wins, for example. You probably wouldn't see necessarily a huge rally in EV spikes. So there's that. I don't know if that's going to be the case politically. I have no idea. But I do think from a charting perspective, to me, it seems built to whip back up to near 10s at some point. And then if that's an eventuality. So I don't trade options on this. It's just a long-term trade. I like the idea of charging stations and suppliers instead of just buying EV vehicles, because stuff like automotives is really risky. So unless it's an established company like your Teslas or something, I don't find a lot of good entry points that really seem appealing to me. Maybe Ford, that one was really low. I came under $10 a few times, and you know, there's stuff like that happens, but this one was just appealing to me. It's kind of the one I picked as a bottoming. So ever since early this year, late last year, I've been talking about it as potentially bottoming here, and so far so good. It's made its advances out of its S-curve. So it had this like drop down, breakdown, and it bounced out and it's pushing out right now. So I think it's on a wave 3 up to $3. Simple trade, not really a huge return. Yeah. So I guess he was timed out. Stephen Page. Is this a guy that was like bearish? He was really bearish, right? For a little bit. And apparently this like really screwed him up here. I agreed with Steven when this up thrusted and came low. It looked like it was going to potentially drop, but it reversed. It did what it needed to do to come back up, so. Yeah, I don't know what thesis he's talking about, but whatever. You guys already know my TA about it. So we'll watch it carefully. I think we've got it pretty much pinned down here. Yeah, we'll see. I mean, if he was listening to the stream earlier, I don't disagree. It could go down to 14. But I don't think that's happening right now. I think it's turning. And unless I see it break below here, I'm not going to agree with that. So I'm all about that confirmation, you know. So if it doesn't confirm, I'm not going to say with 100% certainty about something. Because it could still change character, you know, until confirmation happens. And it's usually like a good sign that it's not going to change character. That's what confirmation is. That it's picked a direction, it's going with it. So I personally think he probably wasn't here yesterday, more than likely, but I personally think GME is in a really good spot to turn, go back up to the 30s. And we both can't be right. I made a case earlier that if you were looking at this as a downward example, you'd probably say it's going to go down to like here, 13s, 14s, because that's where the creek is. So I don't disagree with that. If he thinks it's going to drop, I think the idea of 13 to 14 probably is very reasonable. But it's just one guy's opinion. Just like it's just my opinion, you know. I don't even know what GLHF stands for. Good luck hedge fund? I don't even know. Good luck, have fun. Oh. Yeah, whatever, dude. We'll find out. Gotcha. Yeah, I guess that's kind of swarmy. I mean, anyone's welcome to have their opinion. I've talked about it quite a bit, so I'm not really sure why he would be like spamming this channel. He was actually here when I talked about the 315 target, so I'm not really sure I understand where that would come from. Like, that doesn't really make sense to me. Like, that someone would do that here is really bizarre to me. But to me right now, this is still looking pretty good. Like, the overall setup hasn't really shown me anything that's super detrimental, except for this sell-off right here. That's kind of it. This is a double flush. It's really just a way of building out a potential diamond structure. So usually that ends up playing into a higher target or a lower target. I don't think GME is going to go back to 80. My TA is a little in the middle and probably going to bug some people, but I genuinely think it's going to hit like 30s and then it could potentially stop there. I think there's a rejection possible at around 35. And then I think if it does continue, it's probably only going to hit 50 before we see some kind of a secondary possibility of rejection. So not here to necessarily people please. I know that that's not what people want to hear. I know that I've previously said much better things about GME, but I just got to wait. I got to wait on it. It's just not, the targets aren't where they used to be. They're not there. So I don't know what to say about it other than it's just not following through. GME and AMC are similar in that way. Like some of those early targets for AMC were higher. They were up at like 18, 19. They just were. They were just higher. And GME had high targets too, but it just changed. Like time takes a toll, it changes things. The way that the trajectory set up did not match those high targets. So as the crow flies in a 50-50 swing, I think it's very possible that GME ends up back and having a secondary squeeze here back up to, and this would be like the perfect time to tell people to sell because I mean, look at it. It's completely and totally oversold. I mean, you talk about Killjoy coming in and saying like, oh, sell off. You know what I mean? It's like, well, the last time it was like down here recently, it was here. And then it had a big leg up. I'm not saying it's 1-to-1, but it's kind of weird that a lot of times, like the folks that are very, very bearish, it's like, it's possible. I can see the technicals. I can see why they're saying that. But I'm also like, what about this? You know, like, what do you make of this? How do you understand this motion down here? Because I don't see this as like a downward continuation motion. I see it as like a compression. And that just doesn't scream down to me. If anything, you would say it's going to come back up first. And even a bear, like who's, no offense, but like a bear who's worth their salt would probably look at GME right now and say, yeah, it needs to have an upthrust that fails because it needs to kind of reset RSI for a downward move. It doesn't really make sense to continue down indefinitely right now. And I know RSI is not the only thing, but it's about selling. This has had a long, slow, dead selling pressure. This is not dropping off the face of the earth selling pressure. This is a wind up and unwinding, and that's kind of it. So I genuinely think that this is probably like maybe there could be a sign of weakness here, but to me it just looks like auto reaction and a phase B top. Yeah, and then I think you could easily get an upthrust at the very least, even if you thought this was bearish. So I don't know, man. I got to just say, to me, it's like opposite land for GME. I don't know what else to tell you. I don't believe that bear thesis right now. So, and I'm the same with AMC. I've already talked about this. It spent way more time in the upper 50% here bouncing. That's not typical for AMC in a distribution. That's very much the opposite. We almost always get these massive upthrusts continually, and they're here. It's not like they're not here on the micro. But on the big picture, it's like most of the time it looks a lot more like this. There's a lot more buy-in on the bottoms. We spend almost no time in this lower 50% here. I find that to be very, very significant. I don't think that that's a small thing. So even like the simplest mind and the simplest explanation here may not be the one that you want to hear all the time, but this is not. This kind of bottom right here does not look bearish to me. It just doesn't. This looks like up like down thrusts basically that are failing. So that's where I'm at. I'm like, okay, well, we just did a big flush here, and after the flush, we basically came back up and reassumed the middle of the range. That's what happened. And in addition to that, that flush did break this trend, which is a big deal. And I don't think I could have stressed that enough. Like, it wasn't positive that that happened to me in my book. But it did come back up, and on the 4 hour, it checked this trend. So it's currently bounced off this trend. So unless you saw like a breakdown right here, and then this capitulated, I don't see a reason to be overly bearish. And I don't really see a reason to be overly bullish right now either, which is making me sound very lukewarm. But I'd have to just say, like, most of this is still more bullish than bearish, even in the midst of this up thrust, down thrust, double flush action. So I'm looking at this like, well, if that was a retest of that 4 hour trend, there's not much more room down. I mean, you don't really need to see it drop low. The opportunity to drop low kind of passed by over here. And I mentioned yesterday, I had drawn this out yesterday, and I think it was here first thing this morning. I said we should get, it was kind of funny, I was talking about it when it started happening. I said, well, at this point we failed to advance here, but it looks very bullish. I said it looks like those bullish bottoms where you get this kind of like double attempt at the trend, and then what usually happens is that you dump low and then you try to break it. And that's exactly what happened. I put it like over here or something. So if you looked at it this morning, you probably would have seen this. But I actually made that right before this drop yesterday. And at the end of the stream, we watched it go down. And I said, well, it's either going to hit, I had on my screen, and I can show you, just in case you're like, nuh-uh. I had on my screen 506 and 515. Oh, there it is. There's the little diagram that I doodled yesterday right there. I said 506 or 515. One of those, it needs to push one of those through, and then it can reverse. And it pushed 515. It didn't go down as low as 506. It went to like 511. So it actually kind of split the difference between the two. And to me, that could be it. Like, that could be the last. That was the hit on the 4 hour. That's an up thrust by anyone's standards here, at least for now. You know, it could always change, but that's an up thrust here of this potential break. So, and then it broke through this big fan. I don't know how you could look at this and say that that's super. I just don't get it. Like, how could you look at that and say that's super bearish now? Like, the efficiency of that move is that it broke low. Or, you know, in this case, I'm reversing the chart, but I'm like, it did break down. So, and that means it broke up. So I'm like kind of confused as to how someone could say like the thesis is dead or something, like bull thesis is dead or something. I don't know. That's bizarre. Bizarre to me. What do I know? We'll find out. Like Dave said, we'll find out. I suppose if it were bearish still, and this was just an elaborate bull trap, and that's what it would have to be, because it looks like it's broken out, I guess it would have to be some kind of an upthrust. Like, again, I don't see how you could do it without another push, because you've already kind of confirmed a jump here. You need to instigate a sell-off. I would still think you'd come over top and create a UTAD. It's just like a GME. If I thought this was going to go down again, I would say it'd need to come up here and then capitulate. And that's weird. I know it looks weird. It doesn't make a lot of sense. Even on this chart that I'm charting, it's like, how would that work? I'm not sure, but it would still make more sense than not, than just saying it's going to drop. This to me would make more sense. Like, oh, you're failing to advance, and then you go. I don't know exactly how, but then you could drop. That's the only thing I can think of, like a UTAD of sorts. I suppose that upthrust could be here, like at 530, and just fail to advance here and then drop. Like try and fail. So like push up and then kind of drop from there. Then I'd still look for that bottom parallel. I mean, you can't just get rid of it. You'd have to have like a creek drop and a parallel drop, you know? You'd have to drop both of these here. So I don't really get how you could go anywhere unless you drop through like 492. I think GME is going to come back to the mid 30s, and then we'll see. I do not want to give huge targets right now in GME because I'm not confident that it's going to make it past the mid 30s. I understand that frustrates people who are really into GME. They want it to go farther. I get it, but I'm not going to give you any targets that are higher because for now, that's about as high as I think it's going to go. Like my confidence levels drop significantly after that. So for GME, pretty confident if this bottoms out and does either one of these two things, that basically by next Monday you're going to start a big run up. Pretty confident that it's going to go up to the 30s if it does that. Not as confident that it'll go beyond there. So I do not have that as like, oh, it's definitely going to do this or that. AMC is a little different. The slingshot for AMC is pretty clearly built out a path to as high as like 13 or 14. So it's very different, you know, in that regard. It's not the same. If we don't get a pop today on these calls, I'm just going to let them go for AMC. I'm not going to hold to tomorrow. I just don't feel good about it. So I have those 5-5 calls for AMC. I know that the FOMC meeting's coming up. I can't remember if it's like 2 o'clock my time or something. Forget. Where is the let's see here. I gotta be honest, I might not watch it. I know that would make you guys mad, but I may need to take a break if it's coming up at 1. I can't find it. You guys are like, don't you know this by now, Booksy? Yeah, you would think. $2 p.m. Eastern time. Darn it. That's like 1 p.m. then. That's coming up in like 10 minutes, isn't it? 20 minutes. All right. That's it then, I guess. I'll take a 20-minute break. I'm going to take a 20-minute break. I'll be back. I'm going to leave it on AMC. I won't leave for that part, but I'll be back. I'm not gonna. Why do I think it won't go higher than the 30s? I'll answer your question as quickly as I can because I need to take a quick lunch break. I spent a lot of time chatting with the Latvian people, but there's no confirmation beyond 3370 because of the way these set up. So this is set up very similar to 2021 where there's a specific target in mind. I don't feel arbitrary about it. I feel pretty confident about it, and I don't see it as a definitive, oh, it's going to go beyond that. mainly because, again, I think it's right at the edge here of this trend, just like AMC. I think it's going to bounce off. For AMC, in its models, it tends to go beyond this. And then it's also higher. So that's the difference. This has a more sure kind of maybe SOS, maybe top here. The difference is that in 2021, this particular setup was very much the same, but these angles were approaching the top. That's the difference. So like when you look at the two, you can do the exact same analysis, but you'll see that these angles actually approached the top in 2021. So it's not that it couldn't get there, because if you look at 2021, you'd be like, oh, it's going to come to 48. There's a couple key differences. One, there's the angle at which this is at. This is a much steeper angle. So that's one big thing. So in 2021, this angle is much flatter, and therefore it barely peaks above just to get to that price. So one thing you might say is, hey, it's a different angle. But I also think that it's such a perfect turn here. Like it's basically like a halfway point right there for this move up, right at 33. And I think that's why we're targeting it. I think we're targeting it as a potential breakout level and a potential support level. So if we were to go above this, I think then that becomes support for later. Does that make sense? But I also think it's way too similar to ignore. And I don't believe in just picking targets just because it went there last time. So last time in 2021, it went to $50. Like it would have went right back to this top. But I don't believe that that's necessarily the best way to do it here. It could, but I also think that the angles here are lower, period. So I have to just take that as it is. I've got an intersection for Monday, the August 5th at 33.60, which would tell me that it takes off on Monday and it makes its way to that level. That's it. That's the only thing I can glean from this. That's the way the analysis works here. Maybe it goes way beyond it. Maybe it doesn't. I can tell you with confidence that mathematically this is set up really well. I've already talked about that. It's got a really clean 50-50 move up to that point above this creek here. I mean, everything about it, it's like 50-50-50. Like it's a really simple like 1, 2, 3 move, increasing in altitude every time. It's a parabolic kind of setup to give you like increased moves at a rate of 150% per move, basically, or 100% per move. Sorry, no, 200% per move. I messed it up. You know what I mean? So like those things are there, but beyond that point, the next one up is that $50 level, but I don't have any evidence of that target right now. I just don't have it. So I don't think it's set up the same way. That doesn't mean it can't get there, but it might mean that this has like a slower approach. You know, it could be that we see this boil down into an earnings decision in September, and it could end up going up there then. It's too soon to tell. I just find this to be way too speculative. So I'm not going to treat it like AMC when it's not AMC, and not vice versa. I think both could go up and have different variations on how far that goes. And again, GME purists are going to be like, dude, that doesn't make any sense. But I just remind you, like, hey, the secondary squeeze happened on AMC, and it didn't happen the same way on GME. It had to do a lot with the options chain, but it didn't happen on GME. So take that for what you will, but they weren't the same then. They don't necessarily have to be the same now. So my expectations are just different, and I could be wrong. I mean, it could be back at 80 something, $85 in a few weeks or something. That could be pretty crazy for GME. I just don't have anything beyond 33 right now, so I'm just going to wait on it. No, I'm not buying any more. Just don't buy any more books. Yeah, no, I won't do that. I'm not messing with anything right now. I'm trying to figure out if I want to get out of these 550 calls. Those were a short-term swing trade. They expire on Friday. I think this is an S curve that's going to continue. So I'm going to wait it out. But if it dumps today, I might just get out because I think even if it ran tomorrow, it'd be a hard one to get profit on because of how short term they are. So unfortunately, if I get a call that's expiring on Friday, I usually try to get out before Wednesday. That's my own personal rule. You do not have to listen to that rule if you do not want to. There's plenty of people that trade really on the nose close to it. Expiration. I can't seem to make that work for me. So I feel like if I don't get out today, I'm not going to get a good price. So I'm going to try my best to see an exit today. Some of them made profit, some of them didn't. So I'm going to have to play it by ear, I suppose. I'm going to take a break for like 12 minutes. I'll be back. See if I can do this Powell thing. I mean, makes sense. Anything that adds to the move is good. So I'll be right back. Give me like 10, 15 minutes. I need to eat. Okay, I'm back. I'm going to try something different this time. I don't think we're going to stream the FOMC meeting. I might put it on, but I'm just going to tell you, because I think what happens usually is that I try to stream it and YouTube doesn't like me doing the double stream. So instead, and it's also typically more like boring, I guess. I don't know. We don't really get a whole lot by streaming it. I mean, I don't feel. Oh, it says at 1:10. So it starts in 8 minutes. So I guess he's late. Well, there you go. Yeah, let me get rid of this chat nonsense. Hold on. Get out of there. I don't care about that. So I'm gonna, I think I'm just gonna watch it, and then if I hear something, you guys can watch it on your own. And if I hear something important, I'll let you know. I'd rather just chart than listen to him talk. We do this like every time, and every time it's the same. I mean, there's very little that actually is said beyond what we already know, and then the people ask the questions, and nothing happens. No cut, nothing changes. CNBC set left rates the same. Well, we'll hear it from the horse's mouth, or whatever they say. Oh, gosh. Wait, Dave, you said it was a 95-5 odds they cut? Nah, I would have said they would maybe announce like the same schedule, but I don't know about that. 95% odds they cut. That's a pretty. I'll take those odds. I like them odds. Yeah, I bet you do like them odds. That they didn't cut. That's that they didn't cut. That they didn't cut. Scroll up, guys. Hey, I'm gonna look. Hang on. You have a $5 call? That's good. I should print if it pushes late today. If it doesn't, I don't know. But I mean, it's already in the money, so. Odds are 95-5 against. It's either cuts or he guarantees cuts in December, but the latter would be more of an uptrend. I see vertical line on IWM. I'm confused. Oh, you're saying that the odds are against it, but you think that it would. I see, because you said that's what the odds are saying. I think we get a surprise. Yeah. So Dave said it was 95-5 against, but he thinks that it was going to. So he was just saying like those are the odds. I think it's going to go the other way, a surprise. So that's hopefully clarifying for Dave what he actually said. Because that is what I read. I just read it. So I mean, I see that. So no change. He's still not talking. It's 1:10, so we're just waiting. Waiting on Mr. Powell, Mr. JP. Jerome, get up onto that stand. Let us hear the words. I feel like Jerome Powell is some kind of a kindred spirit. I don't know why. Maybe it's the way he talks about stuff. He just doesn't seem to give in to... He's very good at politicizing, I guess. I thought he was so funny on that Senate panel. Like, anytime anyone asked him like a loaded question, and that one time they were like, what do you think about our policy doing this? He said, I think that's your job, not my job. And I said the same thing like right before he said it. I was like, that's not his job. And he's like, well, that would be your job, not my job. He's like, the funniest thing I've ever heard somebody say. I don't know why. I just thought that was so funny. I was like, he's right. But a lot of people would have been baited into answering that question. He was just like, nah, I'm not going to answer that. And then they did the same thing with, what do they call it? Like Bidenomics or something. They always say stuff like that. Like with a president, it's always like Trumponomics or Bidenomics or Obamanomics or Bushonomics. Bushonomics. Because of Reaganomics, right? Ever since then, they're like trying to shoehorn that in. Clintonomics. Clintonomics kind of works. Reaganomics kind of works. You want to know why? Because their name ends in an N. Maybe Bidenomics, but Trumponomics doesn't work. Obamanomics. Obamanomics. Oh, that's funny. Bushonomics doesn't really work. But sorry, I just got stuck on that word for a minute. But the guy said something about Bidenomics, and he was like, I'm not going to answer that question. Just thought that was so funny. Like, dude does not fall into traps easily. It's like he knows. He's like aware. He's like, I'm just here to spit some facts and leave. If you start coming at me with something political, I'm just going to be like, nope, not talking. Everything's political at the end of the day. I mean, he obviously knows that, but here we go. Getting some Bidenomics. Obamanomics. I can't stop. I'm so sorry. Oh, I forgot the inflation is transitory trap. Oh, well, gosh. Yeah, there were some times where, I mean, I feel like he's done a pretty good job. I don't know. But maybe that's just my perception, and I'm sure some people will completely disagree. They're like, no, he's horrible. And I'm like, I don't know. I think he's been fine. Maybe he got like schooled on something, and I don't know. His wife was like, now, Jay, don't fall into them traps. And he's like, I've been doing this for a long time. I don't know what her name is. We'll just say Clarice. Clarice, I've been doing this for a long time. For some reason, they just get me, man. She's like, just remember what we talked about. Count to 3. Just breathe. You get what you get, and you don't throw a fit. And he's like, that's right, honey. I don't know. I don't know why she talked to him like he's a 3-year-old. Inflation is going to be bad. We already know what the data is, though, Steven. Like, it already came out. Did you read up on the CPI this morning? Because, I mean, like, parts of it are elevated year over year, but most of it has actually come down or remained pretty much the same. So I don't think that there's going to be news about inflation that changes anything. An interest rate cut decision is probably the only thing right now that would change anything dramatically. So unless they announce an interest rate cut or a date, I don't think it's going to dramatically alter the way that the chart is already moving in these setups. So just one opinion to another. Because CPI came back and it was lower than expected, which means that the data came back and it's looking like it's coming down, and it's been doing about the same. I went and looked at it. It's about 3% increase over time for the last year. I mean, month over month. So it hasn't really changed very much. There's not really been any kind of dramatic upswing or downswing for about a year. So the miss was a 0.1%. So they thought it was going to be 3.1%. It came back at 3%. Yes. So unless that causes them to say, hey, we're going to make an interest rate cut, I don't think that it's going to affect a whole lot. And so far, an interest rate cut has really only propelled the market forward in terms of small caps. I think it would be hard to argue that small caps are the same as large caps in this regard. Small caps waited a really long time to break out of their range, and they sat in an SOS for months and months and months while SPY was running. They just sat going sideways, and they broke out to the upside. So any kind of a drop here would be a retest, not like a full capitulation. So interest rates are going to be better on Trumponomics. People see Trump as more pro small business. So if there's more likelihood of Trump as president, that's going to prop up small caps. Doesn't matter what your political opinion is. That's just the facts. Like, that's the way people see it in terms of like who's elected. Other than that, the only other thing that really matters right now is the interest rate decision. And interest rate cuts are going to be disproportionately better for small businesses, not large businesses. So cuts on interest rates would not be bearish for small caps, which is where AMC and GME fall. Because that just means they don't have to pay as much on their loans. Typically, your smaller businesses have heavier debt in terms of like the kinds of loans that they're getting. So an interest rate cut is going to disproportionately benefit them more than like your major companies. That's so. Now, I don't agree. Look, man, I don't wish you any ill fortune, and I hope that if you have that kind of put and you've basically had that kind of money put in, but this kind of move right here does not look bearish to me. I just don't see it. It's jumped over the creek. Like, it's moved beyond, it did a double flush and then it bounced up. That bouncing motion is all highbrow stuff. It's not low swooping distributive motions. So like everything ever since that big dump has not been bearish. Like it did come back up in a very terminal spring-like action. It came back above 510. It came back above 518. It's rounding off. That kind of rounded nature doesn't typically happen in a bear setup. I'm not saying it can't be different, but this has spent pretty much no time in these bottoms here, and it does not look to me like it's setting up for a bear move. And if anything, I was kind of talking about this when you first came in. I said, if anything, if it were gonna sell off, which I'm not saying it's impossible, but if it were gonna sell off at this point, I think it needs to have a UTAD. We need to have an upthrust after distribution here. Like, it needs to have another upthrust. This is not heavy distribution right here. This is very rounded volume, very flat volume. There's no selling going on. There's no heavy spike to the upside. It's all just kind of rounding off. This would have to have some kind of a big upthrust in order to instigate a bigger sell-off to drive it back through the trend. And I mentioned it really early in the stream, but on the 4-hour, this recaptured the trend. This is no longer beneath the downtrend. So that 315 target is a real target. I do not think it's a fake target. I think it's a legitimate target, but I don't think like right now there's a super strong case that it's going to follow through on this first flush, because the double flush happened and then it recovered and it actually bounced off of this right here, tested that 4-hour trend pretty succinctly, and it bounced. So it really looks to me like a big S-curve to the upside. That's the way I'm seeing it. It needed to do certain things in order to be bullish and certain things in order to be bearish, and it only followed the bull. I mean, I don't know what else to say. The bull trend. So when it came down, I had marked it off and said, hey, here's the things that need to happen. I'm just going to bring it up for a second. It's going to be busy. I said, here's the things that need to happen. you know, in order to continue down the bear path. Here's the things that would happen under the bull path. And all that's happened is bullish price action. We're literally on this final step here. So, I mean, everything from closing above the 4-hour EMAs to breaking and having support at certain levels, moving higher and then finding support. We moved higher than 518 and we found support at 503. I mean, we did these things. We closed above that 4-hour and we're still above it. Like, that's the 4-hour moving average right there. So, I mean, even if it dropped below, it'd have to go below pretty far. And I was saying earlier, I think it would have to go below like 490s before you'd have any real confirmation of downside. So, I do appreciate contrary opinions, I do. But right now, this is not there yet, you know. There would have to be some kind of a major drop with a capitulation, like a kind of a hooking action right here, and then it would have to do it again here. It'd have to basically go back below the creek it just pushed out of, and then it'd have to do again at like 493. It kept rejecting at 537. That's because 537 is like a critical level to break. So the double top here just means you have a localized pullback. So I looked at the pullback and we talked about it earlier. I drew this line, this orange line. When it hit the double top, I said it's probably going to come back down. But it's got a lot of space here. Like, coming back down to get this gap fill does not mean it's going to keep breaking down. So if your puts play there, that's a good play. I'm happy for you. But at the same time, that doesn't mean it's going to go super, super low, because it really doesn't break anything. It doesn't go back below this creek. It doesn't go back below this uptrend. So for me, it's like it could just be a pullback, you know. It doesn't necessitate more downside. Well, is he coming on or not? Because he's not on here and I'm not seeing anything. Are you sure it wasn't like 2:30? Or did they like pre-release the data or something? And he actually goes live at like 2:30. I bet that's the case. So we'll see. I see this as a double, a quadruple top, but the thing is like during this motion, which is important to me, during this motion we developed a steady cross of downward facing creeks. So when I look at this, I'm not particularly concerned about what's happening right here as much as I am about, like, because I know that 533 was going to be a sticky point for us, as much as I am about whether or not this has jumped over the resistances, and I think it has. So I still see this as a potential S-curve. It's met kind of some particular criteria. It may need to come back and fill the gap, but if it does, it can do it without capitulating. So it's a timing thing, right? But it really, to me, looks like it's still got a chance here of breaking out and finishing this S-curve. And timing for these things is always tricky, but there's a... I'm not sitting here trying to convince you that you're wrong either, by the way. I'm just telling you this is my TA about it. This looks like it would happen pretty much like first thing tomorrow or into close. So it's a gap up maybe, or a just an indication where it starts moving. Who knows? So if at this point it's broken down, things can change down here. But I feel like the setup is pretty ripe. So I don't think this motion looks particularly bearish. It looks more bullish to me. Again, hey, we are a people of, if nothing, we're a people of contradictions and diversity, and I don't have any problem with somebody saying that they're bearish if I'm bullish or bullish when I'm bearish. Seriously, don't have any issue with it. So if that's you, like, all power to you, you know. Gap's at 513. Amazing Bluetooth is like every time, Booksy. I know. The gap is at 513. I wouldn't be surprised if it went there. If it gets there tomorrow, again, it's like just looking at this, I don't see that as an issue. Like, I could see it coming up there and checking that, and it wouldn't even really mess with anything, you know? And that's kind of the weird part about it, is I don't perceive that as a breakdown. I don't think that right now we have enough of a case for a breakaway gap. But if we get a massive influx of volume here, maybe. Right now I don't feel like that's a strong enough point. So I'm not going to say it's going to have a breakaway yet, but meaning that you don't go back down. But we got to be kind of straightforward about it. We talk about upside here. At this point, it's not really about gap fills. It's about a liquidity. And so would you need to come back up for liquidity or have a final drop for liquidity? Maybe. I don't see it as anything but like a back test of that trend, though. So we jumped over it here. So it makes sense that we might go back and test it. And I like to flip the chart because it helps me to see it better sometimes. It makes sense. We may go back and test it first before any kind of other move. I would normally expect there to be some kind of a hook motion of sorts. So if we get some kind of hooking motion here and a big drop, I don't think it's going to last. I think you're going to have a rapid fire drop with a rapid fire recovery, more than likely. It just doesn't look like distribution to me. It looks like the middle of an S-curve. And the only way that this could flip is, again, maybe like a double flush. Like, I could see it pumping up here and then just having some kind of strange reversal. But it'd have to come after like a pump back to 550, you know. I just don't see how it's possible to do that move down right now based on the way it's set up. This is the only way I could see it maybe having like a full-on drop is like that. And that's about it. Otherwise, to me, it looks like up. So S-curves are tricky too. I know I talk about them a lot. They're really hard to gauge in terms of timing. I do my best, but it's always possible to kind of drag it out, you know, left or right. You can always find another trend. So I find it to be better just to kind of assume that this is an estimation, and it does say 9:30 on Thursday. And just treat it like that. It's an estimation of time. So maybe now, maybe tomorrow. I really don't think the only other place I can think we're going to get stuck is 550. So if I saw it go to 550 and then reject back through here, that could be a sign of perhaps a sell down. Maybe. But even that, you could see it recovering from, because it could still come back to the upside, you know, in a creek cross. It's just, there's not enough information here to make a definite call. There's no confirmation of up or down. Instead, it's really just volume analysis and pattern analysis on the whole. That's the way I'm making my assessment here. But just to be clear, crystal clear, I don't think there's a confirmation yet either way. Okay. To me, it looks like the confirmation of 530s is kind of the best one you're going to get locally. And yeah, like a break above high here does give you confidence, but confirmation is more about support. And so I'd still be wanting to see, it may even be like low, I'd still be wanting to see that pull down, you know, to 550, maybe into Friday. And you might think that I'm being a little bit too bullish, but we got Dave for that. So he's already kind of taking that slot. Dave's talking about a rip to like 7, and then, you know, he was saying this week. I don't think it's going to happen this week. So wondering why you think early next week they could pop. It's just technical setup. I mean, big picture is usually easiest to kind of analyze, but I've been bullish for a while because of certain things, and this trend was tested. Last time this trend got tested, it ripped. The time before that, it bounced out pretty far, and it got tested right here like a couple days ago on the 4-hour, and then big picture, this analysis, this is basically just like a giant creek cross here. So you're really outside of the main everything. I mean, you've had a trend test, you've had a creek jump. All that's required is an SOS. And then it's going to melt up through these levels if it goes. And I think it's going to go to like $13 to $14. It's the technical setup. I don't really know how else to say it. It's kind of hard to go back through everything all at once. But the same thing applied here. You know, you had these parallels that were ripping up through over time. They're pointing towards certain break levels. In this case, they were pointing backwards to the breakout here, the next high at like 415. Those trajectories increase as time goes on, and you build out kind of a case for potential run based on trajectory input, and they're accelerating. This is bullish. It's an accumulative range, and I think this is the same. So I'm looking at this as if it's that minus that upthrust. That's the only thing that I don't like. That big push up and push down is a double flush though. So technically it's a diamond, and as a result, if it breaks out, it should have that same length in diamond going up or down. So from this point forward, you would be looking at this as a potential move, you know, back up to 6s regardless. You don't see those flushes unless you're about to move. So yeah, long term, I think I've got him on the screen, so I'll keep looking for him. This is essentially like the same setup is what I'm trying to say. And there was a series of parallel structures. I don't want to get too into this too deeply, but these are basically buy-ups, buy-ups, buy-ups. And again, they do have some increasing momentum. But at the end of the day, I was talking about this right here. And these end up being really critical for the move in terms of like where you go find supports later, things like that. And there's a bunch of them. I can't go into all of it. I did the analysis earlier, but just to keep it simple, this move right here, this is like a micro bounce iteration down to a little spring. And we basically got the exact same thing right here. We got that drop hard, and then we had the pump up, the drop back down hard, and then bounced out and found support. So I don't see it as incredibly different. We're above the 4-hour. We're really doing quite well. You know, this is the 1-hour, so we're kind of just barely above that. No, that's it. I don't really have anything else, you know. I've got a lot of analysis that I'm sitting on that I could talk about, but we got the Powell thing coming up, so it's live now. I'm waiting for him to start talking. I think it's a strong probability. It's definitely lagging really bad. So There's a lot to it. I promise it's not just trust me, bro. I've been watching it for a while. Substantially eased inflation.
Today, the FOMC decided to leave our policy interest rate unchanged and continue to reduce our securities holdings. We are maintaining a restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed.
Hang on, I'm going to mute for a second.
Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and business and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our
adjectives.
We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation.
Same thing he always says.
At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment.
All right.
In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond.
Yeah, right.
Policy is well positioned to deal with the risks and uncertainties that we face. In pursuing both sides of our dual mandate.
Okay.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run.
It's really all the same
Our
stuff.
success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Yeah, I'm not hearing anything new. So pretty much the same
Gina
old, same
Smilik
old.
from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and
Oh my
if
gosh,
so,
he's not gonna
why
tell
not
you.
just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate.
Boom, done.
In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Easy. Softball.
So
question.
just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
Oh my gosh.
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example,
Explain
inflation
it to me
moving
like
down,
I'm 5, Jerome.
quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories
this
of
is the volume coming in.
PCE
I'm not really
inflation,
seeing
that's goods,
anything here
non-housing
that's
services and housing services.
Super telling.
It's really just, we had a
just a
quarter
dump ahead of the
poor
meeting.
inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And
positive.
As I said, we did gain confidence.
Volume is coming in.
More good data would cause us to gain more confidence.
Dang, I'm good, man. Sorry, guys. I had to cut myself.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
And what's he going to say? To
So
that?
I would just say,
you're right.
Really, the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting.
Widening.
I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September. And about
I have
today.
spoken. Pulling a Mandalorian on us. Ugnaught, I have spoken.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
Dang it, dude.
So this is the very reason that we're thinking about
stop asking the same questions
that we've said in our statement, that we're going back to looking at both mandates, and that we think the risks are coming back into balance.
Me off.
We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see.
Dude.
We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions.
Look at that beautiful
We are
thing.
watching the labor market conditions quite
at that.
closely, and that's what we're seeing. If we start to see something that looks to be more than that,
it went
then
lower,
we're well
Bugsy.
positioned to
So
respond.
what?
That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers?
I don't know. Does closing your eyes make you go to sleep faster?
Growth isn't one of our three. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus.
Not horrible.
We'll be looking at the labor market conditions
AMC
and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was
still not at
a
the
gradual
top yet,
normalization of conditions. If we see more,
what happens at
it wouldn't be
226.50.
any one statistic, although of course the unemployment rate is generally thought to be
we're almost there.
A good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those 2 things are working together, and we're factoring those both into our policy.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this, and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to.
It's not moving, but
so in terms of I don't think of it that way. I think of it as we're actually in a good place here. We're balancing these 2 risks of go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates.
All right.
And I think this is how we balance them.
I'm done with that. Sorry, guys. I don't have any reason to think that they're going to say anything different right now. So that's what I'm going to stay with for now. Yeah, I just don't really see anything. I hope you heard some of that. I mean, maybe it's kind of gobbledygook to some people. They don't really understand what he's saying or care that much. He's got to balance what he says versus what the expectations are versus anything. He can't jump the gun and announce something too soon. I was frankly dumbfounded again by these questions of like, what would it look like to cut rates in September? I'm like, I don't know. What's he going to say? Well, let me give you an example. If it's good, we probably cut rates. If it's not good, we probably don't cut rates. Thanks, Powell. But really, it's because the question is so terrible, right? Like, it's not because he's doing a bad job. It's because the question is horrible, Like, horrible question. Just common sense answer would have been appropriate. So far, this is doing pretty much as expected since it came up here and bounced. I feel like jumped the creek here. It's trying to do that secondary advancement. Nothing really else to say just yet. There's not really a whole lot of confirmation. I know that it's going up, but it's approaching a top. It's also approaching like a hook value for this swing. So one way to think of this is like a big S curve, and this is the top. So what you probably are going to see is that you have to make a decision here at this top first. And I don't know if it's going to happen today. So we'll watch it, monitor. Would not be surprised if it took a little bit of extra time into the end of the week. Wouldn't be surprised if it just rips. It's kind of anybody's guess here because you're at the previous top. So, from this point forward, the bigger question is, how do you gauge this breakout? I mean, you can talk about anything you want to talk about, Booksy, but like, how do you know if it's going to continue? I think that on the whole, I know I always talk about confirmation, and maybe this is it. Maybe this double top and this double top are done, and that's it. They didn't have a sell through, and you can see that here. Instead, it just kind of plopped up on top of here and then ran. That was a big alert because it went through 538. At that point, you might be in a situation where this is just a straight up pennant. And all I could say about this is, like, aside from a back test, there's not really much else to confirm here. So for me, I would say the back test is this is like SOS stuff right here. If it's going to do a back test, it could come back down to this value. Don't ask me why. I seem to have already drawn this here, but I guess I was thinking about this top. So if it does come back, it would come back down to 225 and then try to advance again, and that's all there is to it. But look, if this jumps over this red marker and holds, we may not see a back test, because if it comes up here and holds, it's probably just going to take off. That's what we talked about early in the day, because that's recapturing. It's basically like a spring action sort of on this trend where you've come below the trend and then you cross this creek and then you jump back into the trend. That's sort of what I was expecting on MPW as well, but I don't know yet. We got to just kind of wait and see where it lands. An up thrust here doesn't mean anything if it comes back and finds support. If it comes back and breaks below 224s, it's going to probably capitulate back down. And like I said, I get it right sometimes, I get it wrong sometimes. I was particularly on this particular spot. Long term, I was thinking healthier to come back down and get that touch. Short term, very possible we can just build out from here and go back up to 230s, and just continuation. So This has a flagpole approach to it, pretty classic TA. You can use the flagpole as like a 50-50. I think I just did the measurement from the breakout point, and that's here, and that gives me a 230s. So we'll see. If it can continue, I think you're going to likely get up to 230s, and that'll be that. AMC at 538 still really hasn't made a commitment to this yet. I'm seeing volume come in, but we're not moving. So I don't know. You know, again, there's a backup here. That looks like a creek retest to me. I was looking at this marker, and then we want to see that advancement. So, yeah, I think it's done. I think it's just ready to go. So I'm gonna favor the S-curve target of like 580s. I know it's crazy. This kind of made it look like it was going to go up into this corner here, but I don't know. You know, again, maybe this is something it takes till tomorrow and then it runs. We can't really say. We just have to watch it. The only real place I'm concerned about locally is 548 for good reason. You know, this isn't the only thing that could happen. You could have a rejection, come back down, and then go. You know, so just I know I've drawn on here like, oh, it's going to reject and drop. Not really. It's more like that's a possibility if it does drop. But if you have you could have a bounce there. I mean, it's just so many things. So we're going to watch the levels between 537 and 550 pretty carefully here. And then GME, I don't even know what to tell you guys. I pretty much nailed this one in terms of, I don't know, estimation. I don't even know how I did it that well, but I just felt like it was probably going to bounce out, round up, and then jump. And it's fairly similar to what we've seen before. So this wasn't like some huge estimation. It really was just more of a continuation of probable outcome. So what we're going to want to see is on this compression that this follows through on the bigger picture. And I've been talking about this on the 15-minute into this corner, that this was a really good setup for a potential bottom. But confirmation hasn't happened yet. So the break above this creek is very, very, very important. This big long-term creek is absolutely critical. I'm going to get rid of some of these lines just to kind of illustrate what I'm talking about. We know there's a gap there, so we don't want to ignore that. But the concept here of this as a bottom means that this creek right here, you see this pink line, becomes support. So there's one of kind of two major ways that we see this happen on GME, and that's about as far as I would take it. One is that you kind of just bounce above, find support, and go. If this is enough, and this is a 1, 2, 3, 4 quadruple flush, and there's not going to be anything else, okay, it's done, it just goes. If we're going to go back to fill that gap, it could be that this 1, 2, 3, 4 motion is actually much larger. You know, you really could see this as a smaller M cross that then has a drop later. That to me is still possible because this particular creek that we jumped here hasn't really been tested. So I need you to kind of keep that in the back of your head, because as much as I want to be like super bullish on the news, and the fact that, you know, IWM's trying to like make advances here, you got to keep in mind like any little pullback for IWM could mean a pretty significant pullback for something like GME. So you have to keep in mind that this might only advance to 2370 while this is like pumping, but then if it pulls back to kind of come back and retest a level or something, GME and AMC may have a more significant pullback. So they're not one-to-one. All right, and I could definitely see this coming back down, like trying to come up to the top here at 2350. This is a supply zone right overhead because it was a support, so now it has to be rebuilt. I put a little marker there earlier. I wouldn't be surprised if we kind of rocketed up here, almost like a parabolically, and then had a drop. And then if it's going to find support, it's either going to do it right here, like on top, right? Where this has been previously, like this has been supply here. This is going to be where you find support. That's why I've got the little arrow. Or it's going to find support down bottom, and that's going to be on a gap fill. And I could see that because of the fact that there's a gap here, and then we jump the creek. So sometimes that second push, this happened on GME, can result in a bigger double flush where you're like going really high, make a new high, and then you drive the price back down. Then you start advancing. Definitely a possibility for this bottom, like not out of the question. So keep in the back of your head that if it advances up high to 2350, GME might still need to have a pretty nasty sell down back to that gap fill in order to check that creek. I don't think it's 100% like, oh, this has to be the case. I just think that the way in which it's moved in the past makes me think that's a pretty decent probability that we're going to see like a widening here in an attempt to drop it back down perhaps and see if we can get another low before we come back up and officially find like a real support here, and then we cross the next creek after that. So this would be like a test. Hey, and yeah, you know what I mean? If I'm wrong, it's just going to go up anyways. Like, it doesn't matter. I've got another little example here of it just kind of approaching and breaking. But I think if it rejects, you're going to head low. They're going to try to drive the price back down, and then we'll want to build out again on those creek levels and kind of work our way back out. That could be how you kind of pin it into a Monday, which was speculative, but definitely a possibility. If you're looking to kind of pin it down here this week, you kind of absorb the buying here, let it come up, and then you drive the price back down in a sell-off. And AMC is kind of the same way. Like, you can absorb buying here up to a point. I mean, you could take it up to 550 and then drive it back down, fill that gap, and still be kind of bullish. So, you know, I've got a lot of different possibilities here. This is definitely not out of the realm of possibility that you come back to this point. You know, and that's normal. Like, it's normal to see that kind of bullish price action and then have it drop back for a back test. It's not what has to happen, but it's something that is definitely on the table. So until we get over 550, there's not really a huge reason to be like, woo, we're running to the moon. And even then, I'd still be concerned about the end of the week coming back to 550. I don't think that that's a given. So for me, I'm looking at this last hour, like, I got these 550 calls. I'm pretty happy with the gains I've made. I made 35% on a push here. I don't think that I'm necessarily going to get like a significantly better price unless it pushes up past 550, which would put them in the money. And we may get pinned. I'm just saying, we may see this advance and then get pinned, and we're really not advancing right now. You know, like, IWM's kind of taken off to the races. AMC, GME, both are just kind of chilling on these low pushes. Pretty low. I'm trying to be patient with AMC, I really am, but it's kind of frustrating at the same time. So just kind of watch it, see how it goes. I'm not fully convinced yet that it's going to allow it to run past so I'm going to try to swing out of these pretty quick today, I think. I'm not interested in gambling it away at this point. I'm going to set an order, and if it hits, it hits. So trying to be patient, but I don't know. I feel like there's something about it. Like, I feel like that 550 is a dangerous spot for shorts. I think they're going to try to keep it. I'm seeing a lot of high volume here and not a lot of continuation. Where are we at? 6 minutes, not even overbought. All right. Time to be a trader and do what I need to do here. Talk charts all day. Trading's a little different than talking charts, right? So I'm going to be pretty proactive about this. I'm going to treat it like a creek cross here. Could be an SOS with a backup. I wouldn't want it to come back below 532. So anything back to 532 is okay. Anything below that, not cool with that. I mean, there's always possibilities that something doesn't work out perfectly, but I'm thinking that's kind of the limit right here. So if we can manage to catch this gully, we might get that upswing here later in the day. It's just not really moving. Hate to see that, man. I hate to see IWM just busting out and AMC is just chilling, doing nothing. It's strange. That's what happened last time. It's the same thing. It just seems like someone doesn't want it to move, but I'm not really seeing anything super bearish just yet, so I'm gonna just be patient. Where I wanted to go, I know the wave is here. I didn't have it on this chart. I can just draw it again. I drew it perfectly the other day, didn't I? You guys are like, well, I don't know about perfect, Booksy, but it's pretty good. So let's see if I can find that. It should be the only S curve on here. I think I only did one. There we go. Yep. That doesn't help. It's like way off to the side. This is like slingshot model kind of stuff. You can't really use it to guide. I could do like a Fibonacci version of this. That's always fun. This actually goes up higher than the one I've got here on the screen. Well, I gotta make them kind of the same. What's a Fibonacci thing? I figured out a way to draw fib S-curves a while ago, and honestly, it's kind of a waste of time. So I'm not going to do that. But basically what you can do is create you can do like a fib in the middle and then map out the S-curve, and then you can do a fib on these markers. You can create like a Fibonacci on these anchor points and these anchor points. And usually it works pretty well if you do it right. You can do it at like slight angle, or you can do it like horizontally. And then what you'll have is basically like a fib S-curve, which is kind of neat. I'm not going to do that right now. So if you're like, whoa, do it, I'm probably not going to do it. Why not, Booksy? You have an hour. Well, what would be the point? Like, by the time I do it, this is either going to have gone or not gone. Learning opportunity, Booksy. Fine. Dang it. Fine. Fine. I will do it. Why do you have to put so much pressure on me to do these things? I don't want to do it. I don't want to do it. You should have just not done it, Booksy. It's a complete and total waste of your time. I'm going to just kind of generally line these up and then do like an eyeballed version of it. So what I'm going to do is kind of have that be the top. It doesn't even look like it's going to be the top. Maybe like right there. There you go. So that's a fib arc. And then so on and so forth. You could take it and draw out the middle ones. So this would be probably on like the 786 fib. You can see that. I mean, that's how I would do it. So if you want to know how to do it, that's how you could do it. It's a bit of a task, so I didn't do it. I guess it's cool to see it, so I'm going to just illustrate that for you. I'll just do it in like quarters or something. There you go. So what that does is it gives you like Fibonacci levels within the S-curve, but it doesn't really help you if it goes outside the S-curve. So that's kind of where I'm like, I don't know. You know, you can do like the 0.5, or you can do like the 3.8. And there you go. Now you have a S-curve that obeys Fibonacci levels. But then that doesn't mean anything here. So unless the S-curve is actually wider, then I might make an argument, oh, it's actually wider, you know. Then you would have an argument, I guess, that it does that. You could use that. Or you could use outer fibs. They don't just stop. Whatever. That was a waste of time. So I was just showing you because I said it and then I realized I probably shouldn't have said it if I wasn't going to do it. So that's how I would build it. If I were doing it more like technically, I would take like a line and make sure that all of these arcs are kind of on the same mark. And then that gives me another way of doing a fib, because then I could do a fib here. And this is a better way to do it because you can then take a couple of parallels on those fibs. It's kind of musical looking. But you can go from like top to bottom, and then you can go through here and like adjust them. And then you can have fibs here, in the middle, and on the side. And that's actually pretty good because that gives you a sense of like continuity on that Fibonacci sequence. But I'm not doing that because that'd take too long. Just trying again. Man, it's got to get support at 538. Come on, I need to get out of these calls today. I really want to exit. You're like, just exit it then. They're already up. They're up quite a bit. Both of them are up. They're up enough. I'm going to set an order, see if it hits. I don't think it's going to hit unless we get a big pop. Did you pay 10 cents for the 550? I did, but I averaged down. So I went and averaged down when it dropped. So I got a 10 cent or no, I'm sorry. I got 11 cent order and 7 cents orders. So my average is 9 cents. And right now they're at 11. So or 12. So they're basically up. They're all green. It's complicated. I think it was a mixed order, the first one. They got some for 10, some for 11. I know if it pops, it's going to be like, why did you get out so soon? You know? But if it pops here, I'll probably change my order. I'm really more concerned about, maybe I'll do like a stop loss instead, like a trailing stop. Because I feel like if it runs, I don't want to lose it. I'm trying to get out at 12. But tomorrow and through the rest of the week, it's going to be rough to try to get out of those short-term options. Even if it comes up to 550, you know, even if it got up here, it'd be like hard to get out at a good price. They're going to lose value like instantly. So I could sell some for 35% and then just kind of scratch on the others, or just wait, you know. I got like 10% up, 4%, 3%. I've got like some of these are down a little bit. They're down like 5 to 10%. Playing options is weird because if you're running out of time, you really can't be a big picker. You can't really picky about it, you know. So if it's not worth the stress, you might as well just get out. And I could take a really small profit right now, or I can risk losing it all if it doesn't run. This shakeout is just stuck. So IWM having a big move up, big move down. Looks like that backup that we talked about. We'll see if it can come low versus staying above here. Very, very tight. Hard to say. Hard to say. So this is also going to cause issues for AMC and GME if this stays flat. Kind of builds a strong thesis for flat action here, not moving. We're just not really advancing. So let's see here. The 6 minute, I need to go smaller. I hate to do this. I don't really like being this micro, but I gotta see it. I'm getting concerned about this shrinking because it's really, really shrinking as it's going up here. And we're not seeing that pop. So what I'm talking about is like a rising wedge, basically. And we're not seeing that pop to the upside. And the iterations can shrink as they move up, but if it's continually doing the same thing over and over. Like, let's get rid of these ridiculous S-curves that I drew, because I don't think that's very helpful. If you look at the basic principle here, it's like every time it's coming up, it's essentially just testing the next top. And it's doing this over and over again, but it's not really making that kind of definitive breakout. And so this is normal on an S-curve, but you're going to know what I'm going to say next. It's totally normal on an S-curve to have that kind of squeezing motion, and it does look like a rising wedge. But when it gets to the end, absolutely, you still have to see that breakout. It's not like a questionable thing. Like it has that move, And if you don't get it, you're still basically in the midst of a wedge. So you have to then consider like, well, what is the repercussions of that if it breaks down? I think this is still pretty much it. I think it's an equal part move like here. So it's pretty much this flush again. If it doesn't move, like back to the downside, it's essentially the same, but slightly higher. So you would be back to like 515 again. So this squeezing motion to the upside, these kind of lay up, they almost look like little cups at the end here. They were very rounded on the hole coming up. And now they're kind of pouring upward. They have to be, they have to break out like soon. If we see this do this again, I don't know what I'm going to think about it, but it's going to be really hard to trade confidently into the end of the day. I don't know what I'm going to think about it if it does this. I don't know. Probably just exit and not worry about it. I'd rather see it push out here and just go. Shrinking iterations, not usually my favorite thing. And they are turning into more bowl shapes here, so I don't like that. And use it like squeeze. Come on. It's so close, and yet it will not drop. This is kind of redundant information. This stinks. Snooze. Hit the snooze button, GME and AMC. I'll go later. I don't think I want to go yet. I want to go later. Man, I like this upside down chart. I should just chart upside down all the time. Beep, 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 beep. Time to go. I don't think so. I'm going to sleep in for another 30 minutes. But then it'll be the end of the trading day. Well, too bad. Guess people are going to freak out and not know what's going to happen. Not my problem. AMC, you gotta do something good here. Says who? Just because some dude on YouTube says he thinks it should go up doesn't mean I have to move. What am I, a circus monkey? Ooh, ooh, ah, ah. No one says you're a circus monkey, okay? Nobody said that, AMC, all right? Sounded like you were saying it. You think I don't have feelings? Think just because I'm a inanimate object on the internet that I don't have feelings? Yeah, actually, I don't. I don't think you have feelings, AMC, but that's beside the point. Of course you have feelings. Yeah, I do. And that guy from wherever he was, I already forgot, Lebanon or something. Say I look like an actor. I was like, thanks. I don't know what that means, but Booksy ASMR breathing. You know what I think I forgot to do? I think I forgot to turn the volume back up on my audio. So you guys that have the volume turned up, turn it down a little bit. There we go. That should be better. Jump, monkey, jump. I don't want to jump. I just want to eat a banana and move on with my life. What's going on? Why are you not jumping, monkey? Did your girlfriend break up with you? Come on. Just not mentally prepared for this kind of move today, that's all. Well, you got to take care of your health. I don't see any problem with that, but there's a lot of people that are counting on you. And this one guy, he just bought a bunch of books that he didn't need to buy. He could really use some pump, man. Come on. Come on. Just do one more dance for me today, monkey. I'll leave you alone. Come on. Come on, one more dance. All you gotta do is just jump. Just go. Just jump. Just make it happen. I'll give you a trampoline. Come on. Audible was dumping. It's fine. Coming back down to the top. It needed to come back down. It's, an SOS is not necessarily going to hold the top. So like, even though this came up, I said watch this level at 226.50. An SOS can chop around the top. It doesn't have to hold support on it. So a sign of strength just means that you're maybe preparing to advance. The best SOS that you can find is one that actually goes through it and then consolidates on top of it like that. So that kind of isn't bad, So it goes down and retests this top here. That's what I was kind of thinking, 225. You should see then a secondary advancement, and I don't know. I mean, it could just go straight up, but I think that it's more likely because of the Friday impending Friday. I think you're gonna see some sideways here, and then you got to remember, like an SOS can also have what's called a backup, which would be like a spring. It'd be like driving back down towards a creek, and that could be a little bit lower. So like a number of things could happen here that around what's called an SOS, a sign of strength. It's not always just straight up. In fact, this kind of makes a lot of sense to me going into Friday, potential like kind of debate point for the week, I suppose, would be whether or not this chops or just continues to run. Well, we're just chilling out. Chilling out. Listen, monkey, I got I got a problem, okay? Just hear me out. All right, fine. Look, I get it. You don't owe me anything. I understand that. But I just really, really need you to jump right now. Please. From one to another. You're just dumping. You're not listening. You're doing the opposite of what I'm telling you to do. You're rolling back over and going to sleep. He warned me about this. He said he was like, I'm not going to jump just because you say I'm going to jump. You want me to jump? I'll jump, but it's not going to be on your time. Dang it, monkey. You had one job, dude. And instead, you literally just set a barcode level. Yeah, I realize nobody told me I had to put that on the chart, monkey. Nobody said I did. But I genuinely thought you were going to jump. Thought you were ready. Instead, you're starting to look more like weakness than strength. I don't like that. I feel like you're teasing me. Nobody likes a tease, monkey. That's probably why your girlfriend dumped you. I'm sorry. That was too soon. That was wrong. I crossed the line. I take it back. But seriously, if you can't commit, she's going to leave you. Eventually. If she has common sense, monkey. So you either commit to this or you don't. You keep hitting snooze, or you get up and you jump, monkey. You dance. If you don't know who the monkey is, it's AMC, okay? There's a metaphor going on right now. I needed to personify it so I could talk about it. And it's not working. He's not listening. It's just getting worse. So, I don't know what to tell you. What we're seeing is a widening spread. We got a double top here at 539. It's an iterative move. I'm noticing now, I know I said it a minute ago, but it's the same exact thing over and over. You're basically like kind of double topping, double topping, double topping. It's a compression move. That's not really what we want here unless it breaks out. So I'm thinking it's going to capitulate. It's not good. You guys are like, why? Look, it's a squeeze or it isn't. When you get this kind of a movement like this into a corner like we have, you're either squeezing upward or you're squeezing upward for a different reason. And so you have to understand that anytime you see a repetition of pattern and it's going one way, I don't want you to immediately think it has to go the other, but when this kind of stuff happens, you definitely want to pay attention to the overall direction and pattern. If this is an S curve, you could have very simply like a drop here that then reverses hard and just flushes down to get all the sellers out and then pops. But it's got to happen. Otherwise, all you're doing is you're pressing up and you're exhausting buyers, you know? And there's not really like heavy selling here. And that's kind of problematic because you don't want to see heavy selling at a top, but it makes me think that the shorts are just kind of waiting. They're waiting for a target level and they're waiting for buyers to kind of press it up to this level where they can then sell. And that's what this looks like to me. It looks like not a head fake because that's not really the same thing. I mean, a little bit, but it just looks like an iterative move up that's failing. So I'm seeing this as like giant double top, smaller double top. You're repeating the same thing over, double top, double top. Boom, 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 boom. And then usually as a result, though not always, this results in some kind of a reversal action. So the last one, when this happened, it popped here and then dropped and went to a new low. So if this pops, you don't want it to find kind of an inverted support, which is like supply, right, underneath 532. That would be bad. So if this dropped here and did this, you're in a hook. You're going to probably go ahead and make that bigger retracement. And for me, unfortunately, that means that I'm the dumb monkey who stayed in the calls too long and didn't get the S curve that I wanted. It's not over, it's just that's where the retracement is. And we talked about this as a retracement earlier. Back to the creek level. It's very unfortunate if that happens, so I don't want that to happen. But I guess if it breaks there, 532, I'm just done. I have to just get out and leave it. I think what we're seeing is a pullback that's a little more natural, which is going to be hopefully. I'm not going to have any other way of kind of proving this, but I'm hoping that what we see is that this builds out. I just don't want it to do it into close, which is it's probably going to do this into close. They're not going to do it. They're just going to do the same thing again. They're going to do something dumb like this. It's just going to be the exact same like build out with a push up that goes like slightly higher or something. You're not going to know. I hope that doesn't happen because it's just hard to read. Unfortunately, the S curve looked like it was going to go into about 9 a.m. tomorrow, so that's not a good place to be if you're in options. Iran has ordered a direct attack on Israel. Oof. Well, war would obviously be bad. We do not have a good history with Iran. I find that to be very strange if that's what they decide to do. That is causing a lot of selling if that's the case. AMC seems fairly inoculated. I should have just got out of those calls, man. I should have just went for peace of mind instead of waiting. Been a lot easier. Oh well. It's at 531. I'm not seeing a huge amount of strength here that could hold it up. I'm starting to see those sellers come in now. They know they knocked it down. So they got me. That's that. Dang it. That's going to wreck it. I guarantee you those calls are all red now. So dumb. Yep, they're gone. They are gone. Sucks. Yeah, I mean, like in the grand scheme of things, even if you were like bullish here and that you think it could turn, this is still like a rising kind of wedge action. So any kind of bounce would probably come after a decent 1, 2, 3, 4, 5. Yeah, I think any kind of a wedge would come after a pretty decent drop. It doesn't look good. It looks like it would come back down to that gap. So I think it's going to go for a gap fill. So I scratched. I'm done. Good luck if you're still in it. I hope you guys make money. Maybe it'll reverse. I scratched. I just got out at the same average. Didn't make money on it, but that's fine. Better than losing money. So I'm done. I had a stop loss right here at 531, which was basically the same as a breakdown for me. So because if you look at this, this is where it found support on the way up. So there was an intersection right here at 532, and that makes sense because it's been acting as a support all day, on and off. In the grand scheme of things, though, Booksy, couldn't this just be a backup and then just rips? look, yes, that's a possibility. Once you break this trend, a lot of different things could happen. You know, it just has to find a support. But there's also a wedge. So you have to remember that, like, yeah, that's true. It could just be a backup to get the sellers out and then it advances. Maybe I'm the weak hands. They just shook out. But it's risk versus reward, you know? Like, I don't want to lose all that money that I put into a short-term call option on the chance that it does rip in the last 30 minutes here, right? I've got some cash on hand, so I guess if it started coming back, I could always re-enter. If I really wanted to play it, I could enter for a week out, and I don't have to worry about short-term options expiring. But I'm not trying to get jumpy either. It's just a matter of protecting my when I swing, I don't like, in this particular case, if it's super short-term, I just don't like messing with it. I'd rather go to bed and sleep nice than, and I'm not happy about it. I wanted it to bounce, but it is what it is. Maybe it'll find a bottom sooner and take off. There's a support right here, potential support right there. Could bounce here, but I don't know, unless it just rips through here. I don't know if we're going to see, that'd be cool. I guess it'd be cool if it ripped through. But I don't know if we're going to see a lot today. I mean, it's possible. AMC's done crazier stuff. Running 11% in 30 minutes would be a lot. It'd be more likely to like come up here and bounce out around 450 today. But to me, that looks like the M cross. So I think this is probably correct, that this is indeed like 1 here, 2 here. And usually, though not always, this 2 ends up being a retracement back to some support. So maybe that support, we just hit it at 528. That's a possibility. Maybe that support is at that gap fill, because again, you could come back through here tomorrow and chop down low to get that gap fill pretty easily. So I hate to be like wishy-washy. I know you guys like to see me be convicted about stuff. It is what it is. You win some, you lose some. If it pops, great. All power to you if you held it. And if it drops, great. I don't know. I don't really care. I'm out of it. So I'm going to watch for another entry point later this week for longer term stuff. I wanted that move, you know, and I had seen green after this, and it was fine. You know, I was up here a couple cents. I should have just exited. I knew better. It just was the way it was piling up into the corner bothered me. And I'm going to sit here like regretting it, of course, if it just jumped, but at least I didn't lose anything. There's really nothing to say about it. It's just nothing happened. You guys are like, you're going to regret it, Booksy. It's going to fly like to the moon now that you dumped it. Well, it's an efficient shakeout if it did that. You know? The big picture here is is not bleak. It's just a retracement. So if I'm looking at this, I don't think it's impossible if it makes a higher low to just continue. And it's just a double flush, a flush down and then a rip back to the upside. They got out the sellers, they got out the weak hands. That's me in this case. But if it does break down, this wedge is pretty steep and it's got a lot of height to it. And I don't imagine it would be very difficult to bring it back down tomorrow early to fill the gap if that's the desire. So it's just too close. They pumped up above and it just did not take off. And with IWM kind of trying to find its bottom, it puts you in a spot of kind of curiosity with something like these two, where you're just kind of waiting to see if they can find support as well. Honestly, GME looks a little better to me right now because it made that advancement and held. It looks a little stronger. AMC to me looks like maybe it runs, maybe it drops back down to get the gap. It's hard to say. Hey man, you do you. I'm not telling you guys to sell anything. I had very short-term contracts for AMC. I may have just gotten shaken out. I scratched. I did not lose money. I did not gain money. A scratch is a 0% trade. So I basically got out for my average. I don't really care at that point. You know, if you miss out, you miss out. I didn't have the guts to hold through it. Don't have the guts to hold through it. It's just not for me today. I don't like playing around with end of the day stuff. That's not. You guys are like, so you don't have any balls then. That's what you're trying to say. I don't know. Maybe. I just really don't like end of the day moves. I'm not a fan. It feels like what's happening is that the natural price discovery is on the back burner until the end of the day or something, like, and then you just feel like, what is happening, you know? Like somebody just opened up the hose and now they're just letting it go, and I don't get it. And it never feels right to me. It always feels like something is off. I don't like last minute up thrusts. I don't like that kind of stuff. Even if it's super bullish and it ends up gapping up the next day, it's just not a play I'm interested in. I've been messed up too many times on like fake outs to the upside where I think it's going to go up and then it just dies the next day. I think more bullish would be a drop down, to be honest. If this went ahead and went low, I would be a little bit more bullish, because then it tells me that we're coming down to retest. That's me. I'm just trying to not kill myself. And like I said, if I'm playing a very, very short-term option contract like the 550, I bought it and it fluctuated so much. Like I was saying it would, because you know that it's going to lose value very quickly. It went up like a couple pennies here, and then it went back to like losing value. And then it went up a few more pennies here, and then it goes back to losing value. So like it's never going to hold value. So that's the thing, is like you have to strike when the iron's hot, and I missed it. So this pump right here was it, for at least for now. You know, maybe there's another one here built into this and we'll see something end of the day. But this was the move that I could have got out with 20, 30%. I didn't take it. That was a mistake, because unfortunately I knew that if it dropped down, I'd probably have to get out. Even if it could recover, that's just beyond my threshold right there. I'm like, well, that's not a lot of space. So it had to make a move here and come back up, and it didn't do that. So as soon as this happened, I'm like, okay, I guess I lost it. I missed the opportunity. This didn't happen, so I'm done. And that's all there is to it. You move on. There's other trades. Like you said, there's always another opportunity to make some money. It's never one-sided. On GME, I bought in pretty low down here, so I'm not really expecting a huge return on that. Those are longer term. They're like a month and a half out or something. But if this continues, I'm going to load up more depending on what I see. There's still a risk here of this coming low, so that would be an opportunity as well, potentially. But I don't like AMC beneath 532, so I think that's intentional. I think there was a shrinking iteration that was kind of losing momentum. 1, 2, 3. It needs then to come back down for some kind of a downward move. If it can find footing, and I think it's very likely it will, then we'll see a good, we should see a good bounce. So right now we came up to 539, and it looks like though there's no fib there, I think you could probably see a decent retracement back to that, near that, this creek. And it's debatable. We did hit another one earlier today, this guy, and I thought maybe that's enough. So we'll leave both of these on the chart for tomorrow. So that setup is fine. It's just kind of waiting. Yeah, I'm just not a fan of that right here. It's like pigeonholing into a corner nonsense. It reminds me a lot of an S-curve. Usually it has this kind of narrowing in it, but it almost never goes like straight up. Usually there's some kind of a drop, and then maybe it reverses at that point. So no, I don't think so. I don't think it's going to die. I think it's going to be a retest, probably, of something. AMC always does this. It goes parabolic, and then it drops a bit, and then if it's going to go, it goes again. This is nothing new. Like, it does this all the time, guys. It always does this kind of like parabolic move before it drops. This was looking really good as a bounce here. You see how this bounce transformed right there into kind of like a parabolic setup all of a sudden. So instead of, and this is fine, it's an S-curve, right? You want it to go parabolic. But because this bounced out, it resumes that kind of S-curve up. This creates that parabolic move here where it's kind of compressing. And that's the danger, is like it could just continue. We all know that. It's definitely possible. We've seen S-curves all over the market. They do this kind of thing, they continue. It'd be like saying here, this is in reverse a compression. This is a widening when it came out. It starts widening the range. So then the narrowing does the same thing. It's just a dangerous place to be trying to invest at the end of a day on FOMC when you've only got 2 more days on options. So it's not about the setup so much as it is just the risk. I think the setup's okay. And this is the same deal. You got an S-curve here. There's a widening when it starts, and then you get this kind of narrowing build up towards the end before it continues. You know, and that's normal. That's totally normal for the middle of an S-curve. I just don't know if on a retracement it goes back pretty low and they try to pull it away from that trend, you know, drive the price back down, and it's hard to know. Like, well, where does it go? I don't know. Maybe not that far. Maybe it just stays where it is right now, and then tomorrow it rips, or you get a rip at the end of the day. You move 10% at the end of the day, you know? So, oh yeah, it's coming. We already knew that. It's just these kinds of compressions should reflect in your indicators, and I think they are. I think we see that in GME here, that compression, and we knew that there was some end of the road kind of stuff in this move here back on really Tuesday, Wednesday last week. It's just purely pragmatic. I have limits, and when I see that, I just have to do it. So doesn't mean it can't turn around. You know what I mean? This could be like a phase B top, not an up thrust. And maybe this is going to have like a spring action here, or it's already had that LPS, who knows? Maybe it springs down below this bottom, and then tomorrow or even end of the day today, it's like ready to go again. We don't know. I mean, that's the thing about the market, is when you're in these like tight little pockets, it's very hit or miss. It looks to me like it's testing and trying to regain this creek right here, and that's exactly where we would be, you know. It's like, so you have the cross. This is very, very normal. It didn't hold high, it came down. So the wave, your waveform comes up, builds a support, breaks up higher, comes down low. It's It's making a higher low so far, but now it's getting stuck a little bit beneath this initial wave breakout. So it's a double down, cross down. Now that happens in springs, so you need to understand, like, that's not unusual, because in a spring you'd probably do that, and then when you break out, this becomes like a really violent, fast-paced move back to the upside, for example, because you end up coming low and then pushing out of a local trend down, and it might be happening right now, you know what I mean? You push through a local trend down, and that's where you get those double M shapes, low. It's more like this. Then you get these massive pushes all the way back through the range. But for what it's worth, as soon as this crossed down, you see that volume spike here, like that is, yes, because of that 532, that's the support, but it's built around it. So they've already built the structure around 532. And you can see that that's a break below the uptrend here, right? This uptrend. And it's also a break below this resistance that was apparently crossed. So it's a liquidity test right here. That's what this is. It's a dump to see if sellers pick it up, to see if more sellers jump on board. If more sellers jump on board, you then can do another liquidity test called a spring, where, and it doesn't look like it's going to do it. Looks like it's turning up here. But you could do a spring where you basically have a drop down again, and you try to test low liquidity again, and you see if sellers jump on board. And ultimately, if it's bullish, you take it across later, lower. And hey, if it goes into like end of the day like this, I might be pretty bullish about a potential tomorrow, early tomorrow. I mean, that's not bad setup. That looks pretty good for a potential cross, like right there. Especially if it hit this line, I'd be like, yeah, that's solid. Strong potential for a return back up. So you would be waiting then for that low cross of that creek, wherever it is, whether it's now or later. So what happened though is I knew that if it dropped beneath 532, those calls were going to, I'm over explaining it. I'm just trying to explain my thought process to you so you know why I did what I did. But I knew that if it did that, they were going to be at scratch. They were going to be at zero. And because of the time limit on them, I'm just not feeling it. So if you're holding them, what you're going to watch for is you're going to watch for a breakout here, back above 532. If you can get a break above 532, watch this trend. And if you manage to get back above here, you could be in really good shape for a potential just rocket move, because what that would mean is that this was an effective test. It's just an LPS. It didn't come lower than the bottom, and it's ready to go. So it would have been an efficient liquidity test. You would find that you have support now, and then you would just rocket back through here. Booksy would have been essentially stopped out. That's a stop loss hunt, right? That would have been the motive there. I would have gotten kind of shuffled to the side. And then that's what you're doing, right? Because you're doing a sell test, see who sells, who gets out of their positions, right? And then you could just take it on up through. And this is where you might get something that's potentially quite large. But I just don't see how today that happens. I'm still sitting on this like, I don't get it. The S curve would finish tomorrow, potentially. But this move does not have any time. And it's still like bonking its head here on 532. So what I might do is I might get into something else if I see it drop down for like next week. I'd like to buy low if it drops low here, and especially if it goes for a gap fill. Otherwise, I don't know if I can play this very well unless it comes back above. So it's either low or I can't really find a good entry, unfortunately. And you might think that's a little weird, but 'Tis what it is. So I'm going to watch and see. Maybe we can get a final drop here. That'd be good. I'd be happy with that. I might actually buy it up. Because on principle, I still think that this S-curve might be at play. And that means that these are downward motions back through 532. You can see them here. This is a downward motion that fails and then immediately finds support. This one didn't quite fail. Like, it's kind of stuck underneath. See the difference? This is a more efficient sell test. So by bringing it up higher, they were then able to drop it down low. Probably, again, to get back down to these levels. Maybe to try to get that gap fill. So we'll see. It's a fun one to watch. IWM back to 224.70. Really just full on sell off. Just a lot of heavy selling here. It's almost a throwback to that whole move. It's kind of unfortunate. It may end up reading more like an upthrust as a result. So we'll have to sort of wait. Maybe I'll check tomorrow, but I think that is going to look like a giant wick on the daily. Yeah. So I really think, ooh, that's loud. Really think it'd be better for us to see it come back up. Oh, I can't change the volume, that's why. Gosh, today was rough. That's a rough move, guys. That's a big old upthrust. So it's not holding. Well, if it ends up being fear of war, then this is a very calculated announcement. Unless this pops back up above, even then I don't see it as really positive. It looks like it's going to be just like an upthrust to sell off. And they may be bidding their time for a September move, like August. So it might be back to square one, what we talked about before for IWM. I don't know what that means exactly for everything else just yet. Maybe nothing. I don't really like to talk about these things like on the moment when we're dealing with like a daily price action like this. It's like, well, yeah, I mean, you know what it is. You can see it. I don't have to tell you. That's clearly like an upthrust. Definitely looks more like a double topping action. So that's a bummer. It didn't hold supports. That's a bummer. Hard to say if it's holding any kind of creek value. It doesn't look like it. It looks like it passed through all these values. So I'm inclined to think it's just distribution. Unless it sees like a radically good bounce up here, closes kind of in the middle in like 5 minutes, then it just looks like a sell down. Could be on news of war, I don't know. It looks like it bounced and then just kind of dropped back through, so. AMC's holding up pretty well, all things considered. It's not too bad. We'll see. We'll see which one of these ends up being the prime taker here. I'm thinking down to 525. This is a push up before a draw down. And I don't foresee this being necessarily a stopping point. We may end up dropping all through that gap tomorrow. and then we'll have to watch it. But the gap doesn't take us. That's the thing, is like the gap here takes us to 513. Doesn't necessarily take you through that creek. So very possible to recover. Ugly end, but then again, you know, I kind of like that rounded top here. You guys are like, you were just talking about that like a U shape. Well, it started doing this bowl shape after this bottom, but if you look here at this move down, those kind of spike downs that get bought up are really good. So maybe it's not going to do it. Maybe that's the end of it, you know. We'll find out very, very soon. Maybe I don't have it timed right, you know. Could be that I'm way off with my timing and it's over here somewhere on Thursday. I think that the price target's solid. I think that 585 target is still at play, potentially. I think that we just have to see where it's going to find or lose support. So I don't personally feel like this is a horrible situation. I think a drop down also represents could be a retest of 513 again as a support. What was a support back here? Push, drop, push, test. I don't know. We'll find out. Lambs to the slaughter. It's already oversold on 3 minute. Not that that's a big deal. It's getting there on 6 minute. 3 more minutes in the day. Dropping pretty hard. Pretty hardcore. Let's see if I can get an order in. Gap is at 511. I don't think so. I'll double check, but maybe I did say 511 or maybe I didn't, but I'm pretty sure it's not. Pretty sure this thing closed at like 513. Yeah, closing values at 513. It went to 511 and then it came back up and closed at 513. So that's where the gap starts. $511 is just a low. It's not the closing value. 511 on Schwab. Well, there you go. Don't know what to tell you. Maybe you're right. That's a big volume, huh? Yeah, I don't know what to tell you. Doesn't say it closed at 511 on my chart. It says it closed at 513. So just data, I guess. There's not much I can do about that. I didn't get it. Tried to buy. Oh well. Guess we'll find out tomorrow. I'm pretty irritated. I closed that order like a minute early. I know I had time left. That irritates me. figures. Doesn't mean it's going to run. It's just I was wanting to get that bottom. So I set an order right here. See if I can catch a bounce. Kind of a dangerous thing to do, but I had a week out on it. So if it did bounce and run tomorrow, I've got the move, but I'd lost it. Yeah, I don't know what to tell you. That's just not what my chart says. So you might be right, but I've got an open here at 521. I've got a close at 513. They might get their data from different sources. Question mark. That could be it. Well, it is what it is. I let go. Gotta let it go, Buxy. Tried to make that end of the day play. It didn't happen. IWM looked pretty crappy today. So I'm going to check that daily candle. I don't know what to make of that, you know, from a technical standpoint. Does it look like an upthrust? Yes. I don't think that motions like this always end the way you think they're going to end. So I always keep an open mind. But just on the whole, if I saw this normally, I would say that this looks like the creek got checked or got broken and went way high. And then somebody sold it all the way back down. So bears dumped it back down to underneath the creek. And that more traditionally is a sign of selling. So if we were to see this normally, I'd be like, yeah, it's probably selling. With the news as it is, you know, it kind of reminds me of anything. You might have this kind of as a way of flushing down, you know, maybe to try to bring the price back down low, just like we saw with maybe AMC or GME. You could use that momentum if they can drive the price to try to get that lower low here. There's obviously negative news if the if impending war is a fear. Iran, we're not big fans of, so usually in America, it's just the nature of it. We haven't had a great relationship, and that's no one's surprised about that. So you have to take into consideration maybe there was a positive and minus negative news, like just back to back. Maybe there was something else, you know. Maybe there wasn't an intention to run it. We don't know. Those are question marks. Maybe there was. The only thing I can tell you is what the chart shows. And right now, it just shows an upthrust that then drove back below. So maybe this is a flush to try to get you back down. Typically, I would say that's kind of bearish. There is another possibility, which is an upthrust with a retracement back to a creek value. That's something where I'd have to kind of go back and look at this a little more closely as to like where is that support. I want to say it's like right here, and again it's sort of like near that gap. So a flush here with an upthrust could be a way of getting us back down to 220s and not actually like be super distributive, because again the nature of this may just be advancement with a backup. And IWM's had some really gnarly backups. So I would not put it past the realm of possibility that this is a backup to the creek here or even lower here. Since this is where we jumped over, it's really hard to say. I favored this blue line earlier, and I don't really know why. It doesn't look like it matches anything. It just doesn't. You can see it on the chart. It kind of works on RSI. It doesn't really match anything up here, so I'm not sure why I put that on the chart. But I did, so I don't know. It technically closed like right on that marker. We'll just have to wait and see. Tomorrow we'll know. Man, GME dumped. So that was one of the fears that I had. Golly. One of the fears I had was that we would drive the price up and then have a more succinct sell-off to go back to retest this creek. It didn't even do that. It just went straight up above and then back below. So that's very frustrating as a GME trader, because you saw the move up, looked like it was going to try to hold, and then that end of the day news just dumped it right back down beneath that advancement you just made. It's just more of the same for GME, just disappointments. So again, like, I'm not going to debate gap values, but I would say that if that's the case and it's dropping, it's tough, man. I don't know. To me, that's definitely a close below, but I don't want to debate it. I just think it's a close below. It just looks like it didn't hold. That's all there is to it. You might have even put it up here, at that point. So that's really unfortunate. This is just below everything again. Again, locally, it's like a thrust, up thrust down, and then it's the same kind of stuff we've been seeing on AMC, just these massive swings. Like, massive swing here, all the way to the upside and back down to a new low. Just pumping it up and dropping it down. And it's just a shakeout. Tough one to call in today. AMC looks so like chill compared to the other two that we're looking at. What did MPW do? Eek. Nasty, nasty, nasty. So it actually made it to the end here and then failed pretty badly. So take it for what it is, not for what you want it to be. It still looks like a widening to me, Like, I don't see it as necessarily a channel, but there is a channel. I mean, you can see the 45-degree channel on the screen here. Pretty close. Just being a channel down. It just looks like a widening. Like, this right here looks like a widening spread. It's just massive selling on that bottom. Huge volume. This hasn't had this kind of volume since this sell down right here. And look how low we are. It's not like we're way up high. This was like off of the top of a creek. This is not even there. It's selling down off this one. I think they're seeing this as a breakdown then. Well, I got the right line. It's funny how I was like boasting about it right before it dumped. That's what you get, Bugsy. You should not boast about stuff. Ever, ever, ever. Bad idea. Yeah, that right there, they just try to dump it. I mean, if you look at this and you compare this to like GME, it's kind of the same. They both had this like wind up in July and then unwinding. So I'm seeing that as a big, like, huge, almost head and shoulder type structure. And it does beg the question, like, well, where is it going to end? I don't know. Maybe it bounces out and continues the head and shoulder structure down for a long time, till August 14th again, where that next Fed meeting is. It's hard to say. That kind of a movement here doesn't read to me as... It reads to me like it's a definitive bottom. And if you look at where we are at 482 on MPW, this is the level I marked off a while ago because it was, and is, I should say, very significant for the history of this security. It really was a last point of support before this thing dropped. And I feel like, even though it's so similar to AMC in the number department, it didn't really become super relevant until this area where you have this drop down off the 484s. So I definitely see that as a possibility for why that volume came in, like just sunk the volume to try to drop it below that value. So if it holds, positive sign. I mentioned 481, 482 was the 30-week moving average, and that's a significant hold as well. So I think we're seeing a lot of volume because bears are frankly probably not interested in going up anymore, and they don't see this as like, oh, it's a pullback. They want to see it lose support and drive the price low. So that's the reason I think you're seeing a heavy amount of volume here. And yeah, and if it's a widening, and I think it is, I think it's going to eventually, if it breaks back up, if it should head back towards 515. That's where the widening kind of starts, or at least 509, you know. And we got to get back above 5 on MPW if we want to see a move. So got to be above 5. It's not looking great because of the market on the whole doesn't advance right now. It's going to be a tough sell for MPW. I think to just have an advancement on its own would be strange. It's been running very much with the market in some regards lately. Harder one for me to argue would run contrary if this drops. So a little too loud. All right. That's all I'm going to say. Kind of a weird end to the day, but it's okay, you know. At the end of the day, not too much to say about that. Could be a potential spring action here that leads you out. Could be nothing. Could just be a bounce. And I can't really tell. So it didn't really, it kind of ended beneath here, so it's hard to say. You see that? You see how it kind of like came up into this pocket? So definitely an indecision point. I like this move down. I do like that bounce, but because it stopped short, it's very meh. It's probably by design. They don't want to give it away, so it didn't go back above 532. Which gives bears hope and bulls hope. Bull hope, bear hope. Always the same. Inflation, fine. No rate cuts yet. War, perhaps not fine. These things bring about change, so you never know. It's just stuck. Stuck in the mud. All right, guys. I'll see you in the morning. Hope you guys have a good one.